Good morning, everybody, and welcome back to the final day of the Tom Williams mentorship course. And it has been a long week, isn't it? It seems to have just flown by. But the good news is we've been making money. We've traded it several times. We've looked at the principles that we know and we know these principles work. And today we're going to go through the mental process, first of all, of how I prepare for my trading day. I've already prepared for my trading day because I've been trading for a few hours, as you can see. And what we're going to look at, though, is how Tom looks for his trade setups. And on the other computer here, I've got Tom's $25,000 trading account up. That's the account size that he trades publicly. And if he sees a trade, we'll go and take a trade. I'm trading the $5,000 account still. The account number, as you can see, is 4855. And as you can see, so far today, we've made money on shorting the British pound. I'm still waiting to get back into this trade potentially, although we have found a support level. And Tom's actually seeing some setups. Again, they seem to be on the currencies, but gold is looking very promising too. Okay, so let's close down the trading dome for a second. And we'll put the scanner up. And what we're going to do is we're going to start by going through what we're looking for, so you can understand what we look for. And in order to do that, I'm going to bring up the scanner in Trade Guider, RT, because that's what I use. And can everyone see this scanner that's running live at the moment? Because I use this all the time. I don't show the public this very often because it's so good. I keep it to customers like yourself. But I do use this. We haven't talked about this week, and some of the trades that I've picked out this morning have come from this scanner. Now, the first part that you're going to notice is that we've got these little blocks in here, the H, the small h, and the L. Now, that all means something. Now, what it means is when you see a large block like that with H, it means there's ultra-high volume appearing on that chart. Okay, so that's my Yao Ming bar. Okay, so I don't have to zoom around loads of charts. I just look at the scanner. Okay, so this particular group is called currency futures. We're looking at the 6A, the Aussie, the 6B, which is the pound, the 6C, which is the Canadian, the 6E, which is the euro. Let me just get rid of that. I don't need that there. And we get rid of the spot forex symbol. And of course the 6J, which is the Japanese yen. Okay, and the Japanese yen has just come up with a setup of which I'm looking to short. Well, I am short this contract. So we'll explain that. We'll explain why in a minute. But first of all, please understand that what we're doing here is looking, what I'm looking for on these charts is resistance levels to the left, which I call trigger numbers, and then very unusual volume. Okay, so that's really what I'm looking for. So let's start off then with the yen. Okay, now we'll start off with the 15-minute chart, which I've got up here. Okay, let me put up 200 bars. Now, do you all agree that there is resistance to price to the left of me at 2542? Yes or no? Do you agree there is some resistance and we had a decent downtrend yesterday at that price level? Okay, good. Yes and yes, good. Okay. And do you agree that we've got some very high volume that's come in the last 30 minutes of the London session? There's quite a lot of high volume that's hit that resistance level. But what interests me is this bar here, which tells me the supply is coming in. But I love the next bar because the spread or the range of the bar narrowed from the previous bar and it closed below the previous bar. So to me, I'm not even looking at a trend here at this moment in time. I'm looking at a trade at resistance. If the market upthrusts here, okay, or it continues to rally because there's a test, I'm going to have to close the trade out. But we did see a trade this morning, Tom. In fact, Tom identified this. But then 2 bars later, we had no supply. Now, that is not a great place to be short there. Because if the market pushes up like this through a resistance line, and there's another resistance line above you, and you see some sort of test, it's very likely they're going to mark it up again, which they did, here and push it through that resistance line. So here was not a great trade because of, well, a number of reasons. Number one, because there was still room to go up, which we can see from the trigger line, which is this red number. So there was room to go up. The market gave us a signal a few bars later and said, hey, I'm testing the supply to the left. And actually, as the market came down again, they did it again here. No supply. And the market did fall, but then it rallied up. And what happens is, remember, professionals sell into up moves. And I could see that I've got a serious resistance line above me. And then, sure enough, right at the London Open, they've marked this up massively. The next bar there closes lower than the previous bar. And what I'm looking for now is a retracement here down to 2,500, the round number. So about a 30-tick move. Now, Tom has seen some very interesting movement, obviously, on the yen himself. He spotted this. But he's also spotted something on the Canadian dollar, which I'll show you. And again, what we've been doing, let me just go through the process. The first thing we've done this morning is look for the ultra-high volume bars, and there's been quite a few of them. So, and not just on the US markets. There've been a few in the UK. We've had a few stocks that have exhibited negative behaviour. And so we can see that there's a lot of volume around. So that's good. That means there's activity. Remember, volume is activity. And what we're interested in is following the activity of the smart money. So let's go through the charts that Tom's picked out for this morning. Now, he's picked out the Canadian dollar because of this bar here. Okay. Now, that bar there is stopping volume, followed by an immediate test a few bars later. So we'll get Tom to talk about this chart. It's a 15-minute chart of the Canadian dollar, and what we're seeing here is an attempt to cap the down move. Now, I wouldn't be long here personally, and Tom isn't long. Okay, I wouldn't be either. I wouldn't be short or long on this chart at the moment. But there is an attempt to stop this market. I have a funny feeling we're going to go down to the round number again. Everything seems to be drawn to round numbers. But here, everybody, is the mentorship course is Tom's. Here is the master himself, Tom Williams. Please welcome him. Tom, over to you.
Right. Thanks for that, Gav. Yeah, it's Tom here, Tom Williams. Okay, so you've got chart up the 15-minute Canadian dollar?
I have.
Right, so I looked through these this morning, and immediately I thought that this Canadian dollar looked interesting. I was actually looking at the 5-minute, but okay, 15 minutes just as good. Now, right here, look, we've got a shakeout. Can you see that, Gav? Mm-hmm. Quite a serious one. They rammed it down. It closed well up on the top quarter and massive volume. Right. Okay. Well, that's an attempted shakeout. So it shows that there was definitely supply in the market at that moment. Next bar, a blue bar, no demand. Then it came down, but it's come back down just below the level, the low of that shakeout. And there's a principle here, one of ours, is that there is little or no selling pressure.
No supply.
No supply. In other words, there's no downward pressure on the market. And I think we've even got a signal there, look, green signal. Mm-hmm. You press F1, what's that say, Gav?
No supply test.
Fair enough. Yeah, okay. So that was the reason why it looked interesting to me. And I would not be at all surprised if that doesn't go up. But they may want another test or something. Markets never do exactly what you want them to do. All you can do is sit and look at them, and then when they do something that you recognize as a sign of strength, then you will go in.
Samir's asking, is that climactic action on that bar, the one behind 4
No.
bars back? Is that climactic? It's not really clear. It's just stopping volume, really, isn't it?
It's it's a shakeout.
Yeah. Is it climactic action, though?
No.
Not climactic. Now, why is that, then? Because it's quite high volume on there.
Well, first of all, for a real climactic action, usually you have quite a down move behind you. You know, there'd be, I mean, there's a little down move, but not a lot, is there? Like, you'd expect it to come off a week or so. And then it marks down just like that into fresh high ground. But climactic action usually stays down there because they're shaking everybody out. They're absorbing all the supply. And that will usually mark a selling climax, which then you have to wait for it to be tested to go long on it. But that's really a shakeout look, probably on some sort of news or something. But the market's not vulnerable enough. Look, it hasn't really gone down far enough. And there's far too much supply for that market to say, right, I'm off, I'm going up at that moment. However, it has fallen back down to that level now. And we do actually have a green sign of strength, which Gavin will point out, right there, at that level, where to the left there was supply. That would be the indication that you're going to get higher prices. Okay, so that's what I see on that chart.
Yeah, I've got a question for me, actually. I'll answer it. Okay, so the question comes in from TP, says, why would I, meaning Gavin, not take a long trade on this particular chart, which is quite interesting? And the reason is this. Okay, we have in the background a Yao Ming bar. We are right down at the low of that bar. Where is the Yao Ming bar on this chart, everybody? Where is it? Is it over here to the right edge, or is it to the back of us? Where is it? Okay, now, if you want to know what climactic action looks like, that's it right here. Now, did the market immediately change behavior? No, they marked it up again and again. But we're now at a very critical level because they have come in. There's no doubt about this. You've got to read the chart. They've definitely come in and supported the market. This is probably the Bank of Japan at work here. Some large bank in Canada that's supporting this this market at the moment. But it is being supported. And for me to go long, I would be going long against the trend of price, which is definitely down. If I put a trend channel on this chart and select my first two highs and my intersecting low with a center line on it, you can see where I'm at. We're at the center of the trend channel and we've got support here. Now, if I go long based on the signals, do I think the price will rise a bit? Sure. But is that high probability trade setup? Probably not, because you've got a lot of resistance to the left in that high volume bar. You've got a lot of supply around in the market, and there's nothing. I mean, look at the color of the diamonds here on this chart. It's pretty choppy in here. It's pretty choppy. What I'd like to see is a clear principle, and at the moment on this chart, I don't see anything other than this shakeout right here. But I've got weakness in the background, not strength. So this is, to me, this isn't the highest probability trade setup, but it might occur in the next hour or two. We don't know, because what might happen, and again, we must listen to what I'm saying. We don't know for sure what's going to happen. We must trade what we see. What I'm seeing is we have got no supply here. The market has rallied as we've come on air. Tom said he thought the price would go up. It has gone up a few ticks. But there's nothing that I would say here that would get me excited enough to rush in and trade that. Now, if we go and look at the yen, the Japanese yen, we can see the market's drifting up at the moment, okay, and it's going up on low volume. If that stays that way, then that's going to confirm the weakness. If it doesn't, we're going to get an upthrust. And I'm going to have to close out my position there. So again, I'm looking at this resistance line to the left here. We've got serious resistance all along this price level at 2542, and we're actually up now at 2542. And so I know there that if that market tries to go through that resistance line and the volume is low, we should see a pullback. A pullback back down certainly to the bottom at least of that bar where the very high volume is. Now, Tom is scanning some other markets as well. He's looking at the yen at the moment. So let's bring in Tom to talk about the Japanese yen 15-minute chart, where he identified some weakness appearing. Market hasn't yet responded to the weakness, to be fair, but it's certainly showing indications that it wants to try to push up on no demand. Yeah, it is Gling. It's they're testing the supply to the left. It's a no demand actually is the opposite of a test, really. They're testing the supply, but in this instance, what no demand would tell me is that there's no demand from professional money, and the price will fall. So, Tom, here's the yen. Your thoughts?
Right, thanks, Gav. Right, well, I don't normally trade the yen. I've looked at it in the past, and don't forget, it's a terribly liquid market. And when you have a liquid market, then it means that you may get a sign of weakness appear. Then it'll go sideways and go up and get another sign of weakness because it's so liquid. And that's why yesterday we suggested that you tend to specialize in a fairly small area of the market that you're looking at. And then you get so familiar with the way it behaves, noting also the liquidity of what you're trading. Okay, but right now, look, I noticed it because you've got this terrific high volume. It's a 5-minute chart I'm looking at, Gav.
Mm-hmm. So you've got to look at the 5, okay.
There's definitely heavy supply there, look, on the last 3 bars. There is supply there. But because it's so liquid, it can turn around and fool you a little bit. So that's why with the yen, you need to really, really make sure you've got the principle correct there. Okay.
Yeah. So what I'm seeing here is you have got no demand here, but it's not confirmed. But it goes up at the moment on quite light volume and trying to penetrate this area. This is a little bit like if we look at jumping the creek. If we're going to try and jump this creek and push through that supply, which could happen, you're going to need a lot of volume to get through it. And that bar there is a weak bar. It's not a strong bar. Markets don't behave that way. So can we ask Tom, what is the easier market to trade for a novice? There's no such thing as an easy market. I don't like the word easy. Easy would imply that one market is easier than the other, and I don't agree with that. I think you can become a specialist in a market. I like the currencies YF, but I think the word easy is probably not the right word, the right description. What you're looking for when you trade is a market that you feel comfortable with, and the market where the principles appear to jump out at you. Now, we haven't even looked yet. Well, I have, but I haven't traded it, the E-mini S&P. But I have traded today the British pound, and I'll talk about that trade in a minute. It's a little bit, actually, the pound trade is a little bit like this one here. Is a resistance line to the left. You had supply hitting the market, and I'm looking for the market to come down here to 525, so about 12 ticks. That's where I think we're going to get down to this red line. That's where my target will be. Let me show you here where I think we're going to go down to. And this is against the trend of price, which has been pushing up. But they're going to want to test that low of that bar. They're almost definitely going to want to come down and have a look at that. And so we're seeing here, if we measure each bar as whether it's a strong bar or a weak bar, you've got a weak bar here. It's confirmed there must be selling on the next bar because it closes lower. The next bar, we close lower than the 50% line. We have a test. The test tries to hold, but then it fails because there's too much supply on that bar. Look, it's an up bar, volume's even higher, but we go up there and we go up on no demand. There's no interest at that point. And this bar here is what I call a lethargic bar. Okay, it's lethargic. It's trying to go up, but look at the volume. There's nothing there. There's no professional interest. And there should be. If they're bullish, we should have seen higher volume. So my target down here is at about 525 because I am counter trend trading here. There is a trend of price to the upside. But I do have the principles. If I look at my sequences that are in my book, there's your supply. There is an upthrust. It doesn't even have a signal on it, but I can tell that's an upthrust. It's not even particularly hidden. It's just a weak bar. And here you have no demand. And in fact, it says here weakness has appeared. Well, it has. Weakness did appear on that bar. So we want the market to basically close now lower than the bar behind it. And then what I'm going to start to use there is Tom's simple trending system, because what I've got now, if we look here, we've got down bars are red. In order for this to push further, I need a secondary down bar here to stay red, and then a push through this low at 525, which would be my initial target. Then I'm seeing the market behaving and changing behavior, actually, behaving in a weak manner then. And so I'm just looking at the bars here. I'm not trying to be clever. I've got weakness in the background here. I've got an upthrust there. I've got no demand here. I've got a very weak bar here. Not quite no demand, but no effort to rise. The mark down here is a very negative bar because it closes lower than the bar behind it. And I'm looking at initial target there of about 525, 525. And the reason there is that they're probably going to come and test that. And so if it comes down there and the volume is low at that point, I probably don't want to stay in the position. So, Tom, a couple of questions came in here. When you see a sign of weakness appearing, is it stronger when it's at a resistance level in the past? Because someone said they see a lot of red signals in uptrends that never turn out to turn the market, which is true. Sometimes you do get a red indicator, like here, and the market continues to go up. So how do you know that that is a genuine sign of weakness? And it's a good question. So here's Tom.
Well, you will see occasional red arrow on the move up. But in the long run, they're probably correct, because when you get a red arrow, first of all, look at the next bar very carefully. If it's a down bar, right, and the volume is low and the spread is narrow, close the middle, means that they've seen whatever the computer saw, that there's some sort of weakness there, right, and they're testing the market. That's one of the strongest buy signals we have. But on saying that, very often, because of the way they distribute, right, if you see a red arrow, but the market then continues upwards, very often, if weakness is at the top there, it'll retrace back down to that level where that red arrow first appeared. So be aware of that. So that red arrow may be telling you something. Now, as far as the best markets are concerned, the best market is one that works for you. I mean, look at the Australian dollar. I mean, that's fairly easy to follow. I mean, right now, I'm looking at the Australian dollar there, Gav, look. Right at the top, there's a sign of weakness.
Yeah,
it's fairly easy to see, look.
Supply coming in, yeah.
You know, it's fallen off on that. Where perhaps the yen is not. That's why I don't normally bother with it. Because it's so liquid, you see. They've got so much going on in there.
It's very heavily manipulated by the Bank of Japan as well.
Yeah, I bet.
Yeah.
Heavily manipulated as well. So it's best to avoid those difficult ones. The Australian dollar is usually quite clear to see, as we're looking at it right now. There's a sign of weakness up there. It's come off somewhat, and you can analyze it. So keep that in mind. Don't fight the market, whatever you do. If something's not clear, just turn the page. Go to something that is clear. Or keep turning the page until something does become clear. But don't hit your head against the wall against these difficult ones. And the Japanese yen, I think, is difficult.
What's your favourite market to trade? Someone said, what do you really like to trade?
Well, I find that the Dow or the S&P Mini the easiest.
Yeah.
To be quite honest, because the Indications are fairly clear. It follows a routine, a patterns, although we don't follow patterns, as you know, but I say patterns. But and as far as currency is concerned, you can go through the currencies until something jumps out at you. But the Australian dollar, to me, is quite nice to trade. And I know Gavin likes it as well.
Yeah, thank you, Tom. Okay, so let's now go and look at the markets we're scanning at the moment and see what we can see. Okay, so we've got the Aussie dollar here. Okay, so we've got we're going to go through each pair, and we're going to start. So we're going to scan the currencies. We're going to start with the biggest time frame and try to define what the trend of price is. Okay, on the 4-hour chart. Okay. TP says, if it were to go back to 2.5, I think you're talking about the yen there, TP. So let me come back to that because I'm going to get to that in a minute. Okay, I'd noticed, it says Luke, I'd noticed that in an uptrend you will get clusters of red arrows around pivot highs and no green arrows and pivot lows. I took that as the composite operator manipulating the market to create new buying opportunities on the way up by knocking the market down. Once they have added to their position on a net basis, they let the market have it heads to continue to move up. Yes, Luke, well, that's exactly how it works. Yep, I don't disagree with you. You will find that markups happen all the time. What we're trying to do is know when is the final markup. Now, let me ask you all a question. I'm just going to put 20 bars on this chart. What is the trend of price? Is it up, down, or sideways? What do you think?
What you looking at, Gav?
I'm looking at the 4-hour chart of the Aussie dollar here, and I'm asking the group here, what is the trend of price? Interesting. Okay, interesting. Very interesting. Because you see, as I look at this chart, I could look at it in two ways. I could put a trend channel here and here. I could actually say to myself, well, look, here's the first two lows here. All right. And so actually the price is trending up and retracing. Or I can look at it a different way. And this, I know this confuses a lot of you. I could put a line here and click OK, and the price is now trending down. Now, I think David Weiss has joined us, I believe. Good morning, David. How are you today?
I'm fine. How you doing, Gavin?
Oh, my goodness. You sound like you're standing right next to me. Yeah, I'm doing great, David. Let me just put you on to Tom Williams. He'll say hello to you, and then I'll let you know what we've been talking about today. So welcome to David, everybody. And here's Tom to say hello to you, David.
Yeah, hi, David. Nice
Hey, Tom. How are you today?
Oh, I can really hear you well. So
You doing all right?
Yeah, thank you. The acoustics are working well. Good. Good show.
All's well here.
Okay.
Great, David. Well, nice to have you here. Welcome to the mentorship course, and thanks for your time. Just so you know, everybody, David Weiss, I'm sure David could tell you a little bit about his background in a minute, but is a very, very, very experienced trader and investor in the markets. And David has invented something that I use now in my trading every day. We haven't shown it this week, but specifically because I knew David would be here. But it's called the Weiss Wave. Now, David, we're just looking at a chart here of the Australian dollar. I've already taken a trade this morning on the pound. In fact, I want to talk about that because some people are asking about it. So we will go and actually look at that. And what we'll then do, David, is have you come in and look at where you think these markets are going. At the moment, I've got we've been watching. We're short the Japanese yen, and I've also got this trade on the that I took on the pound here. Let's just show everybody the actual trade itself, where it was. Okay, so there's my trading dome depth of market, as you can see. And so I took about 20 pips out this trade and then exited. Now let's look at the bar structure. And then maybe David could look at this from a wave structure, and we'll see where we're actually at. Now, a couple of things you've got to keep in mind when you're looking at charts. Always look for support and resistance. Now, can anybody spot Yao Ming on the chart? Yes or no? Can you anyone spot Yao Ming, ultra high volume, massive spike? Oh, yes. yes. Where my line starts, exactly. That's my trigger number. That's my trigger number. That is where supply has hit the market. And Michael says he's 2 foot taller here. Well, that's Yao Ming. Okay, that's a very tall bar. Now, overnight, I marked the closing price and watched what the market did as it tried to pop its head above that level. And what happens is we go sideways. We don't get anything that's particularly interesting. But then one of my favorite setups appears. Now, these two bars, can anybody tell me what these two bars are called in Trade Guider? What do we call that bar followed by that bar? I gave you this on Tuesday as a serious sign of weakness. What do we call this? This is a serious sign of weakness. This is not a bit of a sign of weakness. This is one of my favorite setups. And that's why I shorted it. It is indeed a top reversal. It's a 2-bar reversal. Very powerful. But what makes it powerful is what happened to the left. Is you've got supply in the background, and this is an artificial markup by the market maker to encourage breakout traders to go long. But here, I'm not even looking at the trend of price at this point because there's no trend. The trend was sideways. Here, the market goes up. Here, the market goes up, but look at the volume. There's very, very little volume into the up move there. The market has become lethargic. It's like an old man trying to climb a hill who's run out of energy. Sure enough, I then get 2 down bars. Okay, they're designated as red bars. And this bar here and this bar here had an increase in volume on that bar. Then we get what looks like stopping volume, but it fails. So all along here, the market was weak, which is why I went short. But it was good because I had a clear area to the left. So would you all please give a very warm welcome to David Weiss. David, I'm going to give you the chart, and maybe you could take a look at, maybe explain to us just a little bit about how long you've been trading and what you look for in the market. Now, David is an expert in the Wyckoff method, which is what Dr. Gary Dayton explained to us yesterday. And we're very lucky to have David here with us today as we're looking for live trades. So, David, over to you, and welcome to the mentorship course. Over to you, David.
Thank you very much. Well, I've been looking at charts for going on 42 years in trading. And of course, as Gavin said, I took the Wyckoff course in 1971, and it made all the difference for me. Although I've refined it to some degree in my own trading and modified it to today's volatile markets. And let's see, maybe I can take a screen here.
You've got the screen, David. You should be able to see that. I've made you a presenter, and Dr. Gary Dayton's here with us as well.
I just got to. Is Gary here?
Yep. Say hello to Gary. Gary, do you want to come and do a quick sound check and say good morning to all the mentees?
Hey, Gary, how are you, man?
Hi, everybody. Hi, David, Gavin, Tom, and everybody else. Listen, I've got to take Helen to work today. Her car has got to go into the shop, so I'm going to be out for a bit, but then I'll be back, and I'll let you know when I come back in.
Okay, Gary, no problem. Say hello to Helen for us. And we got David here as well, so we've got a whole team of us here. Probably somewhere in the region of 60 to 70 years of trading experience in one room. Not bad. Not bad at all. So we'll see you later, Gary. Take care.
Okay, cheers.
Over to you, David.
Okay, the first thing I see when I look at the British pound is we had a low earlier this morning over here, and you notice that the market has come back underneath that level, and this volume that you read here is in hundreds of contracts. So we had 3,300, we had 3,200, and then notice we only had 1,300, and on this pullback here that actually made a new low, we only had 1,000. So it looks like the force of the selling is drying up, and we're in a potential spring position. In other words, when this is one of the things that I always tell people when I give a talk that you can make a living trading springs and upthrusts. And a spring occurs when a market goes underneath a level of support and fails to follow through in a significant way. And I often compare it to a boxer in the ring. And if one boxer knocks the other one out of the ring and back into the 5th row of seats, his opponent is not supposed to get up and come back into the ring and start slugging away. There's something wrong here. We're dealing with Superman. Now, I'm not saying that the British pound is as strong as Superman right here, but I have to take note of the fact that we've taken out a pronounced level of support, intraday support, and we've had no serious follow-through. And notice we went up on 1,600 contracts, which was more than this 1,200, this 1,300, this 800, and almost equal to this 1,700. And on the pullback, we had a rather minuscule 400 contract pullback. So the beauty of a spring is that you can buy the market at the danger point where the risk is the least, rather than waiting for the market to rally up to here and go long, where you have to protect 25, 30 pips. One could go long in here and conceivably only risk 15 ticks or so, or pips. So that's the beauty of trading a spring. Now, what I like to do is I also want to look at the bigger picture for the day. I started this morning looking at the Australian. Let's see what the 3-hour bar chart looks like, just for reference, to see where are we in the larger structure. And of course, the first thing you see is that the pound is in a position of relative strength. I mean, look at what we did yesterday and where we are in relationship. This is part of my daily routine, is to compare. I like to look at the currencies. I trade them a great deal. I like to compare their strength. All right, let's just look at the euro for a moment. You see the euro, look how far down it is today. Now, it looks like it's gotten oversold in its channel, but it's nowhere near as strong as a pound. Let's look at the Australian. So in terms of relative strength, the pound seems to be the strongest this morning, yesterday and today. The Australian is in an interesting position. It's come back to this previous high where we broke through, and we've come down to the bottom of this where this channel has moved. And we're underneath yesterday's lows. So we're in this little band. But let me look at one more market. Let's look at the Canadian dollar. And the Canadian dollar, like the euro, is much weaker than the pound. But here, too, we have a market that may be in a spring. No, it didn't quite take out the low of the 23rd. That low is 10012, and today's low is 10013. All right, so I have some sense of the relative strength and weakness, and because the pound is holding so well in relationship to yesterday, I think it's a candidate here. If the currencies are going to have a rally, which is probably related to some extent on whatever the S&P does, if the currencies are indeed going to rally, the pound could be a leader today because of its relative strength. Now let's look at this chart on an hourly basis. And if we draw a line under yesterday's pullback low, you can see that the pound has also gone into a potential spring position, but in a much stronger overall position than, say, the euro or the Canadian or even the Australian. So it's a real candidate to watch here, to pay attention to the pound, because it's got relative strength, and we've had this spring action. We've had decent demand on this rally. As I said, 1,800 contracts and very low selling pressure on this pullback. It's my theory or contention, and it was Wyckoff's as well, that markets don't move necessarily in bundles of equal time called 250 tick bars or 5-minute charts or hourly charts. Price movement unfolds in buying and selling waves. Well, you can still see the trend of price even when you dissect it into equal periods of time or tick bar or whatever. You can still discern the trend. But what you do lose is the true force of the buying and the selling. Let me show you what I mean. I have to move all these things here. If I put volume underneath this chart, and I don't know how this is going to look. I never look at regular volume anymore. I look at wave volume. And let me show you what I mean. Okay. This volume, it's not too bad. You have some definition between large and small volume, but you can't tell right here and here that the force of the selling was drawing up to only 1,300 and 1,900 contracts as opposed to 3,300 and 3,200 over here. So this is the raw volume numbers. This is the wave volume, which is a cumulative total. And it's a much more accurate picture of the force of the buying and the force of the selling. So this is showing you here. You can look at the histogram down below, and you see how much smaller these two downwave volumes are compared to here and here and here. So that's a big clue. That's an important clue. And you can't tell from this volume down here that the volume on this upwave was heavier than any upwave since the high made earlier this morning, 3 hours ago. You can't tell that from looking at actual volume. So that's the difference between working with wave and wave volume versus price and just the raw volume numbers.
David, a couple of questions coming. By the way, I've just been filled on my Japanese yen trade, so I'll talk you through that in a minute. I was short the yen. I just got filled at 5.26, which was my target. So David, could you actually have a look at the yen for me? Because there was a lot of weakness in the background, although I actually do think now we've got a very serious level on the yen. I shorted on quite a strong supply bar. Even though it was a counter-trend trade, I was pretty confident it was going to work. And I've just got my fill, actually. My target was at 26. Just talk us through what you see in the yen, because you know the market had moved sideways, but then there was quite a nice bout of supply came in. Let us know what you see, David.
Well, what I see, first of all, is notice that we went up on 3,500, we went on 3,700, and then we only went up on 1,800. What is that saying about the force of the buying? It says the force of the buying is diminishing.
Exactly.
Compared to what we had on the previous two upwaves. In addition, Wyckoff wrote 103 years ago about a concept that he called shortening of the thrust, which is another way of saying loss of momentum. Look how large this upwave is, and then this upwave, and then this is much smaller, and it makes much less progress above the previous high than this upwave did.
Yep.
That tells you that the market is running out of steam.
Mm-hmm.
Now, we haven't had overt selling pressure from a wave volume standpoint. We have not had a great deal of supply come in, but on our attempts to go up, notice how the volumes diminished. Right here we had 1900, which was more than we had on the last upwave, and we didn't make a new high. And then here we tested on 1200, and now only 800. So the market is in a vulnerable position to try to pull back, to sell off some more. That's how I see it. And
Yes.
that's evident by the shortening of the thrust, the running out of demand on the last upwave, and then the attempts to go up that failed, and then running out of demand totally right here.
That's where I went short. Yeah, that's exactly where
So,
you've got it. Yeah, that's exactly
the
where I
market-
shorted it.
So the market certainly is in a position where it has a chance to go down. Now the tricky part of this trade is this previous low, because as you see, we have taken out that low, and we have good volume. We have 2,400 contracts on this decline, which is more downwave volume than we've seen since the low over here. But for all that effort, we really haven't made that much downward progress. So we have to be vigilant here to see if the market's going to try to reverse or not. Right now, taken at face value, it looks like supply is dominant.
Yeah, I totally agree. David, let me, if I may, just quickly take the chart and show everybody how we make sense of that from a VSA perspective with the Weiss wave, because I used the wave that to actually measure the trade-off. And I actually took my profit right on that bar there. Can everyone see my chart, by the way? And just for transparency purposes, let me show you my trading ladder. This is the depth of market, the dome. You all saw me take the short. By the way, did everyone see me take that short trade? By the way, I want to make sure you all saw me exit the trade. Took the trade, measured it to a target, gave the target. Okay, you all did see it. Good. Okay, perfect. So when we go short there, look at where the target was and what David's saying about the market actually moving down to that level. So two things happened that confirm David's Weiss wave. Number one, the market, I pointed this out to you, all of you, that the market was going up on very low volume. There was no energy in the market at that point, which is why I looked for a short trade. Secondly, as the market was pushing up to those levels where we clearly got supply in the background, okay, you can all see that bar there. Okay, that's one of our principles. Supply has entered the market there, and then we go back up there on no demand. We get two bars of no demand. And what David's showing you is the wave count is confirming the lack of energy in the market at that point. Now, it may indeed fall further, but at this moment in time, what I expected to happen in the market did happen. We came down to the low of the supply bar, and then we did get an increase in volume. As David showed you on the wave count, we picked it up as well. Now, the volume, however, on this bar, whilst it is high, is not necessarily going to stop the force of the sellers in this area here. So I took my profit, quite rightly, I think, because I see an indicator showing there could be some demand at this level. Now, David, could you actually go and take a look for me at gold? Because I'll give you back the screen, because I've seen what I think is a very good setup on gold. So far today, I've traded the British pound and the yen, but I am going to be watching very closely gold, but would welcome your comments on the gold market.
All right, well, let's take a look.
That's great. And I'm just going to go and grab a glass of water, David. So if you can take over for a second, that'd be great.
All right. It just takes me a couple of minutes to set up the chart here. And when I'm on this go-to-meeting thing, it eats up all of my poor amount of reserves here. gold is a great market to trade. It has such volatility. It's a market that loves to have springs and upthrusts. I usually use a 50-cent wave. Let me just format it. I'm using TradeStation if you haven't noticed. Okay, so here we are today. What stands out? Let's just see what we had here overnight. You notice that we have a high right over here. And remember I said you can make a living trading springs and upthrusts. Well, here's an upthrust. This was yesterday afternoon's New York time high, and the market overnight rallied up to this level, trying several times. This volume is in hundreds of contracts, trying to break out, and it failed. We didn't get an overt sign of supply, but right here we had 900 contracts, which is the most amount of volume on a down bar since late yesterday afternoon, where we had 1,400. And you can see the ease of downward movement that we had. Here we have 2,700 on this wave. And we continued down, and I mentioned shortening of the thrust. Here we come down on 1,200, 1,900, 1,500. You see how little progress we make from low to low to low, indicating the market is running out of steam. And then if you draw a line across this high over here, I think we have an upthrust. Yes. So the market, quote unquote, broke out of this trading range and failed to follow through. There was quite a large effort to take it up, 1,200 contracts, and it couldn't go. And we turned down with much more force because we're coming into the day session now in New York. This is 2,900, this is 3,400. This is a very interesting situation because here, notice how much effort there is to take the market down. 3,400 contracts, and we make only slight downward progress from this low. What does that mean? I know what Gavin would say, and it's exactly the truth. The market is being bought here. Someone is stepping in front of this and buying. That's what this means. To have all of that effort and to make such little downward progress would be an indication that someone is standing in front of that decline and buying. This low was 1703.10, and this low here is 1702.60. So we made a half a dollar, and this is in about an hour's time with 3,400 contracts, the most amount of volume since yesterday's day session. And for all that effort, we made very little progress. This is one of my favorite setups. So I could go long. I know better than to risk just $2, but I could protect a little bit under, say, 1702. And you notice over here, the catalyst of all catalysts, the S&P, the prime mover of everything. Notice what's happening here. On the S&P, I have a 1,000 tick bar chart, and I have two wave lines on here. I have a red wave line that is a bigger wave, and it's 1.25 S&P points. And the volume in thousands is written above and below the wave turning points. I have a smaller wave, which is a half a point. It's colored blue, and its wave volumes are down here. Well, notice that we don't see what the total volume is on this big wave, but it subdivides into 1, 2, 3, 4, and now 5 waves of 50 ticks or more. And look how much volume is coming out on just this blue wave here, 24,000. So this is most interesting. And look at the 3-hour chart on the S&P. Here too, like everything we're looking at this morning, we see that the pound is in a spring position, a potential spring position. The Canadian is. We see that gold is has tested the low of the day with a great deal of effort and no reward. And we see that the S&P is underneath the low of yesterday and the day before. And a potential spring could develop here if we can start getting back up above what is this 1402. So there's a lot going on this morning that favors the markets trying to turn up. It may have to go through several more tests. Anyway, I hope you understand what I'm talking about.
That's brilliant,
Are
David.
there any questions here?
Yeah, we've got quite a few actually, so let me go through them. Thomas out there, I think in Germany. Thomas, hello to you, and sorry that you had a a family issue there, but yeah, we are recording this, so you will get the DVD. Thomas is talking about high frequency trading, and is stating that 70 to 80% of the volume comes from high frequency trading triggered by computers in the big institutes out there like Goldman Sachs and UBS. And obviously that moves the market. That's true. And he says there's 78 to 80% is what Thomas is saying, have no human brains in front of the screen. It's just a computer. Well, let me first of all correct you on a couple of things. I don't think it's 70 to 80%, but it might be. But even if it is, it doesn't matter. When the high frequency traders, be it a computer or a human being, puts an order in to the exchange for 5,000 contracts, 10,000 contracts, or whatever it is, it prints on the volume. And that's the beauty of volume spread analysis and the Wyckoff method. Because I'm sure you'd agree, David, the markets, although we've now got computers that can put in orders massively quickly, but we can see 10,000 contracts put into the market within a split second. We, as Wyckoff experts, can read the footprints of what these big players are doing and follow them. Do you think this high-frequency trading has had any big effect on the market, David, or do you think it actually is better for us because we can read it?
Well, I don't even think about it, to be honest with you. I mean, I know it's here. If I'm looking at time and sales, perhaps, I can see the market is sort of like price changes are like a waterfall. They just keep flowing in such a large scale.
Mm-hmm.
But I don't care. I mean, here's gold, time and sales. Well, it's not moving like the S&P. I'll put up the S&P and you can, I don't know how it acts at this time of the morning. Well, it's not doing what it normally does, but I just don't think about it. I mean, I'm thinking about the market as if I'm watching two people arm wrestling. And if you had electrodes attached to each arm, and you could tell something about their blood pressure and their calcium levels and all types of physiological readings, that's all that matters to me. I have no concern about high-frequency trading. These computers will run out of long positions, and they will run out of short positions, just like human beings do. They have risk parameters, and if the buyers are strong enough to force them to run, or the sellers strong enough to force them. I mean, Wyckoff said in 1909 in his first book, Studies in Tape Reading, it's always something I like to read before an audience. Successful tape reading, or I say chart reading, is a study of force. To judge, we have to have the ability to judge which side has the greater pulling power. And one must have, and this is important, the courage to go with that side. There are critical points which occur in each swing, just as in the life of a business or of an individual. At these junctures, it seems as though a feather's weight on either side would determine the immediate trend. I can't tell you how true that statement is. I see it every day. Every day we come to that point where if you have the courage to go with what the market says about itself, you can profit, regardless of how many computers are buying or selling and how fast they're doing so.
Brilliant. That's superb. I don't think you could have put that any better. And you know, the markets have been like this for hundreds of years, and Wyckoff's words over 100 years ago are still relevant today. Because I agree with David wholeheartedly. I don't care that there's computers out there taking large trades. You know, there were several thousand large hedge funds using computerized programs to trade that went out of business in 2009. Okay, it's a lot of them. And that's because someone, a human being, programmed the computer. It didn't do it itself. It's a human being giving the program instructions to take trades. Now, let me ask Tom's opinion on this now as well. Tom, you're looking at the markets at the moment. First of all, do you see anything that jumps out at you? I've taken 2 trades so far today, both of which are good trades. But now David's saying there's a potential spring position in the S&P potentially, and it's actually, yeah. And since David mentioned that, and I'll just put this up for Tom here, and we'll have a look. And David's on the line as well, so you've got some signals right down there on the hourly chart, which pretty much confirm there's no selling pressure on the market down here. Yeah, and it's actually gone up a point since David actually mentioned that. But here's Tom, everybody. He's going to look at the S&P, and we'll see if we see any trades on that. Here's Tom.
Right, I've had this thrown straight at me now. First time I've looked at it today. Yeah. But that's Gav. But, okay, so what we got here?
The hourly chart, the S&P.
Right. Now, if you look back a little bit, there's 2 distinct shakeouts in the background, look. See that, Gav?
Yeah.
2 of them.
Yeah.
And yet, it didn't make a lot of difference on the market. Still came off a bit. So there must be quite a bit of supply present for them to do that. Okay. Now, we do have, on the chart, 2 green arrows, green signals, because what's happened is a potential sign of strength is when the market dips down into fresh low ground. That means there's nothing immediately to the left at that level. Okay. And the spread is narrow. It's closed in the middle. And the volume, although it's not easy to see because it's Globex, is low. And there's 2 bars that are actually doing that. And that's potentially a sign of strength. I'd like to have seen, for a decent move, perhaps stopping volume or some sort of indication that they were entering the market. But all this tells us there's no downward pressure at that moment on the S&P 500. There's no downward pressure by professional money selling. Matter of fact, they're refusing to sell. They're just sitting there. And that's probably why it's gone up a little bit on the end here. I'd like to see a little bit more evidence, to be quite honest.
So you wouldn't trade this at the moment to the long term?
Well, you could trade it. You're pushing up a little bit, I would have thought. There's nothing that jumps out at me, except there is, I mean, if I'd have been watching this, and to actually dip down on those low areas, on narrow spreads, yes, I would have probably gone long. But I've just had this chart thrown at me, and there's a blue bar just gone up. Funny enough, there's actually a signal on it. Sign of weakness signal. What's that say?
Supply has hit the market there. It's a high volume up bar.
Yeah, so I would be a little bit cautious, to be quite honest. But it certainly looks more positive than negative. It certainly looks more bullish than bearish. It's Friday, remember. So you've got to be very, very careful about analysing these markets on a Friday. I mean, it was horrendous. Well, it wasn't horrendous. Yesterday we were watching that chart, and there's two gigantic upthrusts. I mean, it was incredible, really. But the market did come off as we thought it would.
Well, I was short on both of them, so.
Gavin said it was short, yes. Okay, that's fine. But right now, I'd like to see... of course, the market doesn't open now for a good hour and 20 minutes, perhaps. But I would certainly... there's those two shakeouts in the background. So we keep that in mind. But they were just signs of supply. Because a shakeout, you get higher prices. So if it wasn't a attempted shakeout, it didn't work, look.
Question coming from Graham. He said, why on Friday have we got to be very cautious when we're trading? Because obviously the weekend's coming up. But do you want to explain why Friday the smart money tend to do things?
Yes. Now, keep in mind, we've been saying this for years, that Friday you've got to be careful, because if they can manipulate the market on a Friday, they will. And of course, the reason is that it's all reported in the newspapers, magazines, and the television channels. And that will tend to influence the herd listening. Now, you might say, oh, I never listen to adverts. No. But statistically, you do, and that's all they're interested in. And so you've got to be very cautious about a Friday, especially if it's before a long weekend holiday. Then they really go for it if they can. And they do, because they know they can make money. Will influence the market, get people on the wrong side of the trade, wrong side of the market. And but they do. That's their business, to make money. And they will do everything they can. And of course, Friday, usually, especially before a holiday, creates a golden opportunity very, very often to do something. But you've got to be careful. Now, I'll be doing my own seminar at 5:30 with Rita and Peter Offen. So we'll have a good look at this then. And of course, I'll be doing the newsletter over the weekend, which you should have. I would advise you to read that, because it shows you, it's typewritten, therefore it shows you my thought process, what's kind of going through my mind, which will probably help you. And I always look at the background, see the demand or no demand, and all this type of thing.
Could you elaborate, Morris is asking, a little bit about the shakeout you saw on the hourly chart? It's right at a round number, 1400. Is that significant?
What, on here?
No, on the hourly chart, the shakeouts that you had in the background here. Now, that one there, there's two of them. Could you just go back and just elaborate a bit on what's going
it's
on?
Definitely,
it's right at a round number, which is quite, the 1400 level is obviously this level here.
I mean, they've rammed it down twice, look. The second one is significantly rammed down, close on the high. They would what we call shakeouts. Now, the fact is that the market came off after the shakeout, shows you that there's a lot of supply present in the market, because normally with a shakeout you'd expect higher prices. Same as if you have a test, you'd expect higher prices. Now, when you say that word expect is used deliberately, because what you expect to happen, if it doesn't happen, then surely that must prove something similar to the opposite. It's like a test. If it's a successful looking test, low volume, narrow spreads, all this stuff, right, you would expect higher prices. But if you don't get higher prices, that's telling you, whoa, I'm weak. And that's why we call it a fail test. But the shaker, there was two bars there. Definitely they were having a go at shakeouts here. So I'm just looking a little bit at the background there. No, but now you see, right now the market's responding, or appears to be, to those two green signals right at the bottom there. And that they've appeared because there are no selling pressure, no pressure on the downside in the market. And that will allow for higher prices. Did you say David picked something up?
Yeah, David was also saying there's a potential spring position. He was absolutely right here. Yeah, absolutely.
Well, in the software when I developed it, I didn't use the word springs and shake and crossing the creek and all those, although I'm familiar with them, of course, because they were part of Wyckoff. But I tend to like to call a spade a spade. If it's a spring, it's really a shakeout just before the up move. So if I call it a shakeout, that's what it is. But there's nothing wrong with a spring because it's something you might expect. I think we saw a clear spring yesterday, didn't we? We were looking at the Euro 5 minute.
Yeah.
And there was definitely a spring there and it went up. That's a very positive sign. But no, you've just got to be aware that your enemy, if you want to call it an enemy, and why the market behaves so deviously is because of the professional money of the other side. And the market to work has to have more losers than winners. If everybody won, then you wouldn't be able to trade it. You just get a moving average line moving around with inflation. So you have to have losers. And professional money, that's what they're after. They're after the losers. And that's why they do these whipsawing and lying and rumors and anything they can to make money. Believe me, they do.
Okay, Grigory, just saw your question. If you've got a microphone, Grigory, I'll open your microphone and you can talk to David and to Tom. So let me just open your mic and say good morning to you. Okay, Grigory, your mic's open. How are you today?
Yeah.
Hey,
Hello,
Grigory.
Tom. Hello,
Yeah.
David.
How are you?
Yeah. Hi, Gavin.
Hi.
Can you hear me?
Yeah, we hear you fine, Grigory. You're broadcasting live to the group, so welcome.
Hello, everybody. Very sorry, I do have a quite bad quality of internet. Actually, I'm sitting in the middle of Himalayas on the height of around 200 meters.
That's brilliant. He's in the middle of the Himalaya mountains. That's brilliant.
Yes.
Yeah, wonderful, wonderful.
Yeah, I will tell Gavin to you about this a bit later. Anyway, I do have a question.
Yep.
You have mentioned several times about trading time.
Mm-hmm.
And just a couple of minutes ago, we were talking about Friday's trading and to be cautious on this trading.
Mm-hmm.
So is there any particular time when you will recommend to trade and when you will recommend not to trade? All over the week, all over the day, all over the hours? So any kind of recommendations in that area?
Great question, Grigory. Great question. Right, let me just close your microphone off and we'll answer it. So, in fact, I'm going to open that one out to David quickly because that's a good question. David, you've been trading for many, many years. Do you have specific times during the week or during the trading day where you either avoid the market altogether or you have certain times during the trading day where you know there's going to be a potential move, or do you just literally just look at the chart? So how do you read it, David, when it comes to time?
Well, for me, I live on the East Coast in Boston, so obviously 7:30 a.m. to 10:30, 11 is a ripe time to be in front of the market. There's lots of movement in reaction to overnight news and so on and so on. Reports come out, but I'm usually here all day. I'm much more attuned in the morning, but then I still keep an eye on things for some ripe plum that shows up later in the day. But I try to make the money in the morning. And then, as I say, unless something really nice and juicy comes along, I just don't do much trading. I have other things I can do.
Yeah, I wouldn't.
In terms of days of the week, it doesn't matter to me. I don't have a preference. Obviously, Mondays, again, there's been a 2-day hiatus over the weekend, so there's more to react to on Monday than there is necessarily on Tuesday, although there may be an economic report. But it's not a consideration for me, really.
Great. Okay, well done. Super, David. And Tom, we're talking about the times of day to trade. Now, you've already mentioned that Fridays can be dangerous in the market, which they can because they've got the news at the weekend. But I tend to find that Mondays seem to be quite difficult to trade. I mean, I did make a trade this Monday just gone, and we did fine with that. But it seems to me they want to test the market on Monday, and you get very low volume. What's your thoughts on that, Tom?
Well, don't forget, a lot of these so-called smart money, come Friday night, they like to go home what we call naked. In other words, they do not have any position at all. They go home, relax, and not worry about anything happening over the weekend that's going to ruin their financial position. But when they come back Monday, there are many of them, then they need to test the market to find out what's the best direction or what is the way the market wants to go. And that's why it's always worthwhile looking carefully at a Monday. And when I do my newsletters and I look at that and mention it, if you see a test on a Monday, classical test, down bar, narrow spread, close in the middle, volume less than the previous two, then that means they want to go up for the rest of the week. And that usually works. So Monday. Now Rita here, who helps me here, she's actually types out the newsletter. She's a skilled typist, trained in the art of, she can type as fast and almost as fast as you can talk, which is always amazes me. But she likes to trade. She specializes in the Dow Jones, and she tends to specialize in upthrusts. And she told me many times that she always likes to look at that market between 5 or 6 o'clock to 9 in the evening, our time, UK time. And that seems to be the time that she likes. And she has a computer running in the kitchen. She's carrying on doing her duties as a housewife. And she's a very nice person, by the way. And she's got one eye on the chart, and if it has a upthrust of any sort, then she trades it. But if it doesn't, no bad, just carries on and does the same thing next day. But I personally, if you want to catch a trade, I know it's difficult for most of you out there, but it seems to happen once the London market opens up. There's definitely traders here in London that trade currencies and even the S&P 500, and you could see them. And you need to be watching that about 8 or 9 o'clock UK time. We saw that yesterday. Now, if you're 6 hours back in Chicago, that means you're fast asleep in the middle of the night. But that's it. And I'm sure that there's a lot of American traders realize that when the market trade overnight, they can trade it in the UK, and I'm sure there's several of them moved over here. But that's what I do, and that's what Rita does. And you could probably, but don't read anything into the market. It's no good being too clever, being too intelligent. It's no good giving a reason why a market does this or that, because you'll never be told the truth. You'll never find out the truth. So you're wasting your time, to be quite honest. Read the chart, because the chart usually never lies.
Yeah, thanks, Tom. From a timing perspective, let me give you my view. I tend to trade when I'm with Tom. Tom is pretty much looking at charts most of the day. Occasionally he doesn't, but most of the day he's looking at charts. And again, what he'll do is I'll be out there making a cup of tea or making him a bit of toast or something. Suddenly, Gav, you better get short here, or Gav, you better get long here. And that's how he does it. He spots it. And you know, what I've learned, the best times to trade, I find anyway, are between 5 a.m. and 9 a.m. Chicago time. That's when you get the moves. The London session, though, is a great session to watch what the market's doing. See, one of the things I'm going to talk about now, before we have a break, is looking at other markets around the world. Now, we know the Australian market, the ASX, actually is well ahead of our own market. We also know that before the Dow and the S&P opens, the FTSE has already been traded in the UK. The DAX has been traded in Germany. The CAC has been traded in France. Now, have a look at what those markets did before the S&P opens. And very often, you're going to get a clue as to which direction the American market's going to go. Not always, by the way. It's not guaranteed. But if you have a serious rally in the FTSE during the London session, it's very unlikely that the S&P is going to go in the opposite direction. It's probably going to follow it because all these markets are arbitraged. Let me ask you, David, do you ever go and actually study other markets around the world to get a clue what's happening in your market that you're going to trade, or do you just literally trade what you see?
Well, I don't have data on the DAX or the CAC or the FTSE or the Hong Kong, so I'm just looking at U.S. markets for the most part.
That's it, and you trade what you see, basically. So if you see a setup,
sure.
You trade it. Yeah, I mean, it doesn't have to be complicated. I think some traders.
Look what's happened. Look, can I show the screen here a moment?
Yeah, absolutely. Let me give you the screen. Hold on, David, and there you go. David's got the screen there. I'm going to go and have a look at the pound here, see if I can get another trade on the pound.
Look what the gold has done here. What a beautiful situation this was. When the market came down to this low and took it out by just a half a dollar or 40 cents, whatever it was, with all this effort and no reward, it was an indication that the market was poised to do much better.
Exactly what you said.
Look at the move we've had. I mean, this is textbook behavior. I see this stuff every day. Look over here. I don't know what's going on. Look at how much demand we've had in the S&P. We have 73,000 on this upwave. The blue upwave, the smaller one, did over 40,000 on the last piece. So this is what I call a bullish change in behavior. And what I'm interested in now is the character of the pullback. I see a bullish change in behavior. Let's see what kind of pullback. If it's shallow and low volume, all the better. It's an opportunity to get long. But the gold has just had a fantastic move. Let's just see if I can get the charts. This damn thing is always in the way.
And while you're doing that, David, Ron has said, could you give us the time in international time? Ron, there's a really great website which is called World Clock. I'll put it up in a minute. It's a really useful tool to go and see what times around the world is. I know some of you are in Australia, so when we refer to United States time, really we should probably use everything as Greenwich Mean Time. GMT, Greenwich Mean Time, is the UK London time, and at the moment here, it's 1:30 in the afternoon. So really good trading takes place between 11 a.m. Greenwich Mean Time in the United Kingdom through till about 3 p.m., 4 p.m., something like that. That's when these moves come. Now, interestingly enough, I did look at gold, and I have to say I missed that move because I was trading I was looking at the currencies, but I thought there was going to be some accumulation down there right on that round number. And sure enough, David, you nailed that one. Actually, you said it was gonna rocket.
So now I'm watching this Australian because it too is in a potential spring position.
Yeah,
it's weaker. Let's see what the pound is doing. I can't get to my wave charts. They're buried under this thing here.
Yeah, well, the Aussie dollar, just so you know, it's moved up. There has been some buying I'm seeing on the Trade Guider chart. So yes, there is, as you say, it's looking like it wants to try to spring away from the round number 1.0300. So we'll have to be
Let
interested.
me just take a look at the pound here real quick.
Yeah.
I think there's going to be something in these markets too. I mean, you see the S&P is going higher. It had a pullback on only 11,000 on the wave chart, and we've continued up. Yeah, there's the pound. So it had a spring that we talked about, and we've been pressing our way upward on the wave chart. You notice that we had 2,000 contracts on this up wave, and we're just consolidating here. It's going to do better. Let's take a look at the Aussie. I don't know why. Oh yeah, it's doing beautifully. At 4,700 here, so it's on its way.
Yeah, I'm looking for a long trade on the pound right now as well. I'd actually shorted the pound earlier, but now it's actually changing behaviour, as we'll see. And it looks like it's going to try to push up here. So any no supply bar, we have a little bit of a no supply bar actually just a few minutes ago. So it's trying to make some upward progress. So yeah, I think, and David, what sort of target could we expect the pound to go to, do you think, if it starts to take off and climb?
Well, let's take a look. The way I project targets, being a man of the early 20th century, in terms of what I follow, I look at the point and figure chart. I mean, take a look. You'll be amazed at what a size we have here of preparation. Let's make it 250 tick bar. Closing prices. 5 days. It says it's going to take a minute or two. I probably put too much data on there.
No worries. Just so you know, everyone, I'm just looking for a trade on the pound around the 614. So that's the number, just to give you all 1.0614 on the British pound. If I see no supply up there, then that's going to push up. So that's what I'm looking for right now. But we do have a very nice signal in Trade Guider on the bigger time frame in the pound. But they could come back and retest that round number. So it's either going to break out now before the market opens, or we're going to go sideways.
$23.69. I think we could see 161.60. How does that hit you?
Yeah, that's exactly what I'm seeing. Actually, the old high from yesterday. I mean, you've got a couple of things actually that are setting up here. Now, by the way, just because from David's point of view, he's not using Trade Guider charts. Okay, just to be clear. And David is using wave counts. Okay, that's what David's looking at. Where
that was a point and figure count.
That was point and figure. Yeah, we don't want to get too much into point and figure. But do you want to just explain how Wyckoff used point and figure, and what are you measuring when you're looking at a point and figure chart?
Well, I took the chart down, but I'm just looking at a line of congestion, of lateral movement. You can do it right here with this chart. This is the Canadian. If I wanted to assume these are point and figure swings, they would be. I could just say we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 to here. 15 times 3 is 45, 3 being the reversal. So add 45 to this low, and that projects to 1.0063 on the Canadian. If we indeed turn up. I'm watching the Canadian because it's been a laggard. It hasn't responded yet. which is really doesn't make it a good candidate. But if the rest of the markets catch fire, I would imagine the Canadian would kick in at some point too. But I'm more interested in the pound than the Australian.
Yeah,
let's see what it does here. Although I see the pound is pulling back too.
Yep. Didn't quite get above the 614 number, so it's
so they have a right to back off. Let's see where we are on the Canadian. Yeah, Canadian is still a dog here this morning. So we've got a low.
Yeah, S&P's rallying nicely though. You see anything you'd want to trade it, Tom, on that?
Well, no, because I looked at the chart too late.
Not right there.
Yeah.
Same old thing, you feel it's too late to get in.
You can see on the Canadian, on the S&P chart. Do you see my chart?
Yep. Yeah, we got it, David.
You can see the last upwave only had 16,000 contracts versus 73,000 on the first big upwave. So maybe we want to pull back.
Yeah, I'm just looking at my charts to see if there's any no demand there. I mean, the British pound has pulled back right the way to the round number on an increase in volume, so that'll be interesting to see what they're trying to do here.
And the Canadian has taken out the recent lows. Very interesting spot to watch. I'm always interested when we take out lows and highs. So is a professional trader, because a professional trader knows that it's at those points that you can establish trades with very little risk if there's no follow-through. This is the daily Canadian dollar chart. And you see we've had a wave down to here, and then another wave, and now this wave is shortening the thrust, potentially. So I think it bears watching.
Yeah, definitely. Well,
although it is the weak sister here this morning. I'd like to see a big slug of volume with very little downward progress like we saw on the gold market. So we had 1,600 contracts. That's not enough to say it was buying. It might have been, but it's got miles to go before it tells us.
Yeah, there's no clear evidence, I think. And also you're in a pretty strong downtrend behind you. So, yeah, I'm a bit like you, David. I'd like to see a nice chunk of volume coming in, showing that there's support down there at these different levels. At the moment, the pound is trying to find the support around the 600 level. Let's just have a quick look. Tom, what do you see at the moment? At the moment, you just had a signal.
Kevin, I'm gonna have to. I just realized I had a conference call at 8:30.
No problem, David. That's absolutely fine. Let me take the chart back. Thank you very much indeed for coming in and joining us today. We appreciate that. And David,
my pleasure.
As I say, I will give you a call probably later on and touch bases with you. And have a great day, okay. David. Thank you so much for coming and joining us. Take care, everyone.
Take care.
Okay. All right. What we'll do, everyone, let's take a break. Let me just switch off David's mic. Bear with me. There we go. I think he's... Okay, so David's left. That's fine. Okay, good. Right, can everyone still hear me? And we're just looking at the pound at the moment with Tom, but also he just had a potential long there on the S&P, but we, unfortunately, I was watching David's chart there, but it was definitely there. What time frame are you on? The 2 minute. Now, Tom saw this. Yeah, there. That was immediately tested. Yeah, we had immediately a test of the weakness, which is very interesting. And that's a principle that you taught me and something you probably want to discuss, that if the market is bullish, you'll see a sign of weakness. Now, that is weakness now. That's an upthrust. But they've tested it and pushed it up higher. Now, we've got to be aware now that there's something going on at this price level. Let's have Tom have a look at this chart for us. before we take a break.
Right, thanks, sir. Yeah, I'm just looking at a 2-minute chart of the S&P. I missed the low part simply because I wasn't looking at it. But I'm just curious what the 2-minute told me, and lo and behold, we have a principle here which you need to take note of. We have an up bar, and there's very high volume on it. So there must have been some selling on that, and it produced a red arrow as well.
Up thrust.
Up thrust, okay, which it certainly looks like one. However, on saying that, 2 bars later, sometimes it's the very next bar, there's definitely a test.
Immediate test, yeah.
Definitely. It's gone down, narrow spread, closed near the high. The volume is very low, so they were testing that up thrust. Something must have brought that up. Well, the high volume, of course. But they tested the market. There's no supply there, right? So it's allowed it to go up again. But I was just curious looking at it. But if you ever see a test immediately after a red arrow, then that's normally what it is, a sign of strength if you're in a full move up.
Okay, a couple of you are asking about the newsletters. We will be sending you, all of you in this mentorship course, Tom's newsletter and David's newsletter. You'll get that in an email. So Lance, yes, you'll get a copy of David's newsletter, which is very interesting, actually, where he talks about where the market's likely to project to. Okay, so what have we seen here? We've seen strength in the S&P. We've got no supply in a rising market. Look, perfect. We've got the Aussie dollar has just taken off, just as David said it would. And let's have a look at the British pound. And that's now at my level. So I'm looking to see if we can get into a trade here. There's a nice setup there, look, a nice down bar, healthy volume. So this is all setting up quite nicely. Okay, what was the world clock link? Okay, if you go to Google, and you just click on this, and you just type in world clock into Google. World clock. Hit that. Click on that link there. timeanddate.com/world clock. That gives you all the different time zones. It's a very, very helpful little website. And so you can see, for instance, in Chicago, it's 7:42 or 7:43 a.m. In London, it's 1:45 in the afternoon. All right, let's take a 30-minute break, and then we're going to run into the final session with Tom, and I believe Dr. Dayton is going to be back with us as well, so hopefully Gary will be back with us at that time. And there's the clock. We'll be back with you here in about 31 minutes' time. I'm going to make a cup of tea, nice cup of tea, and then we'll be running in to the final session of Tom Williams' mentorship course. Hope you're all enjoying it, everybody. We've taken a few trades here this morning, and now we're setting up for what looks to be a very interesting final session. So see you all shortly. Thanks, everyone, and I'll be back here in about 31 minutes. Bye. All right, welcome back, everybody. We're a little bit early, but don't worry. That's because we like to get lots of information to you. Tom and I are just having a little bit of lunch here, but I've handed Gary the charts. So there you go. You should all be able to see Dr. Gary Dayton's charts now. And so this morning, let's just summarise what we've done. We are looking at more short-term trades today, but Michael, we will go and look at some stocks at the end that I think are exhibiting some very unusual behaviour, which if you're a stock trader, we'll get Tom to talk about. We're going to do a scan, a live scan of the market, and we're going to show you how we identify stocks that are looking bullish or bearish. Now, this morning, David came in. David looked at the wave count on the charts. We looked at the volume on the charts, and we could see that the market was in a spring position, and yet the money that I've made today has been 2 short trades. So the Japanese yen and the British pound were both short positions. So now I've changed my view of the market because I can see strength coming in certain places. So I've got to be very, very cautious about shorting. But gold did make the move. Unfortunately, I missed that one. So I was, we all make mistakes. I was looking to go long gold at 17 to 02, but I think we'll get another bite at the cherry. I think we'll get another opportunity to go long there. So, Gary, I'm going to hand over to you for about 15 minutes, if you don't mind. We're just finishing our lunch here, and perhaps you can give us your overview of what you see today and any trades that you think are setting up based on the principles of Wyckoff. Back over to you, Gary.
Lunch. How can you be eating lunch at this hour of the morning? The U.S. Open hasn't, the U.S. session hasn't even opened yet.
Tom,
are you looking at breakfast? Right?
Are you enjoying your lunch, Tom? Yeah. He's what he does, he sits there. He can't bear to be away from the charts. So rather than go in the conservatory, well, you've been here, Gary. You know what? We've got a nice garden out there. No, he's sitting in front of the charts eating his lunch.
Yep. Oh, yep. Lucky you.
Lunchtime here. All right, buddy. I'll be back in about 15 minutes. Over to you.
Okay. Well, all right. I'll give you my assessment here of the S&Ps. I'll start off with a monthly chart. This is what I look at pretty much every night. Now, obviously, the month hasn't finished yet. We still have at least another week, let's just say. Well, we have 1, 2, 3 additional trading days plus today, 3.5 trading days before we're done with the month. But right now, the month is in an upthrust position, in fact, a 2-bar reversal type position. So we have to pay attention to that. That could be significant for us. And you can see that my way of looking at charts is pretty basic. I'm just looking, at the key levels here, highs and lows, and just noting those out. I'm also looking at the swings here, or the waves on a larger time period. You can see that on this monthly chart, we ran up if you look at this high here, that corresponds with this. This high corresponds with this high with this, and this high with this. So you can see we were making great progress here, pretty good progress here, 156 points. And then suddenly the progress started to get smaller and smaller. We call this shortening of the thrust in the wave structure. So it's just something to be aware of longer term. We're in the U.S. elections here, and after they're over, if we don't rally through and close back up above this 1419.75 level, we could be in an upthrust position, and that could be pretty strong on a monthly chart. Could be pretty negative. So just something to be aware of. All right. If we go down, let's find the weekly chart here. This is sort of my process that I go through in the S&Ps at least every week. And I haven't looked at other charts. I've been kind of busy this week, and so I haven't looked at the euro currency or the Aussie dollar. I like to trade the currencies too, and certainly have not looked at oil or gold, which I do trade, but not all that often. I don't know if you're having questions or not. I don't see questions here on this, but in any event, you can see here we are on the weekly chart, and we're, just to give you an orientation here, if the 1419.75 is denoted here, 1419.75 is here, the 1262 level, the 1262. So on the, and then the 106. So on the weekly chart, what we're looking at is this really on the monthly. So if we are looking at that, notice that if we go back a little bit here, you can see that this is 2011. So the high of 2011 is right here at 1373.50. And so I've drawn a line across there, and I have an uptrend line here, a demand line. So that wouldn't be a surprise to see the market come down and test last year's high, and we'll see what happens when it gets down there. We don't know. We can't predict now. I don't see a tremendous amount of distribution here. And this would be around the 1373. I think David has mentioned that there's a point and figure chart count of about 1365. So somewhere in here would be a reasonable expectation for this current move down to end at. All right, fairly straightforward, fairly simple kind of analysis. We're not looking at any kind of fancy indicators. What we're really looking at is supply and demand. I don't see a lot of supply that's come into this market here. We don't see a tremendous amount of supply. Certainly we've cut down and we've gone down below that 1424, and this would be the 13, oh, it's not, sorry, the 1419 level. Is that right? 1424, okay. So the, oh, that's in here, so we're actually back over here. All right. So we've gone down below that 1419 level. Right now, we are bouncing off of this. The low here is 1394.50. I had that down on the chart. 1394.50 is the low. And so we're seeing a little bounce off of that. But notice, this is on the daily now. Notice how we really haven't seen much of a rally here. There hasn't been much, ease of movement up. I'm sure David talked a little bit about that. Hasn't really been much of ability to rally away here. So we'll have to see how this support holds. My sense right now, and I've boxed in this little area here, that we have a low at 1650, and then that 1424, and in the middle of that is that 1419 level, 1419.75 from the weekly last swing high. So somewhere in here, I would expect we will rally up into here, and then the market needs to negotiate this. And is it going to be able to do that? Likelihood is probably not. This is what I would call a little bit of ice. I'll block that in a little bit, make that a little bit larger here for you. Add some weight, and add some color so you can see that, and I'll just leave it here like this. So this would be an area where there was some support that occurred. We made the new high of 1468. We came down to 1424, bounced off of that. Notice how this rally was not all that great, right? It wasn't a really strong rally. We had no demand up here and a, I don't know, hidden up thrust, call it what you like, but certainly some weakness. We come down and notice same thing. We're easy coming down, easy coming down. We have a little shortening of the thrust in here. We spring off of that level. Now a spring, it started off good. We start to see some good movement, but then shortening of the thrust occurs. I went through this yesterday, I think, with you all, right? Or maybe it was Thursday night in deep practice. I forget. I work with a group of traders Thursday nights for an hour and a half, 2 hours every week, going through charts and going through bar by bar type of assessments and walking forward and to help people build skills. So I forget who I'm talking to sometimes. But notice it never made it up to this high. I can draw a line here, because that will hold better because we're in a live market. So it never made it up to that high, and it also never made it up to this high either. And so the spring fails. Our spring fails on us. Our nice little spring that started out, oops, wrong cursor there. The spring that started out here, which looked like we had a chance to go higher because we did see some nice ease of movement. Suddenly, when we ran into the supply area over here, that's this bar right here, and then no demand and no demand, we start to round over with shortening of the thrust, and then we come down with ease of movement, increase in volume to the downside, tells us in advance that the support levels in here are likely to break, and they did. So now we're down here. we're finding a little bit of support here, but so far nothing to write home about for the bulls, really. And so my anticipation is that maybe Monday we'll see this, push back up into this area in here, Monday, Tuesday, and then start heading back down again. And then we'll see what happens down here at 1394. So this would be a trade setup actually in here for a swing trade called falling through the ice. The idea here is that the support level is like a river, okay? A river of demand in here, a river of buying, and it's like a Boy Scout, and this is what the original story was that Bob Evans had told to help traders back in the 50s and early 60s get a sense of how to trade the Wyckoff method. I'm just looking here and kind of seeing a potential trade setup. Well, we'll get back to it in a second. So a Boy Scout is walking along this river, and it's a deep river, a big river, but it's got thick ice. It's in the middle of the wintertime. So he comes down to this level, and he's fine. He's able to continue on his journey, and he comes back to this level. The ice is still pretty thick. But when he gets to here, what happens? The ice thins out. There's no support here for him. And so the market, or he, falls into the river. And, of course, there's a current in this river, and it's going downstream. That's carrying him downstream. And he's trying frantically, now that he's underneath the ice, to get back up above the ice. And what in the ice story is he falls through and then gets carried downstream. Ice thickens up again, and when he gets up to this area, he bumps his head, knocks himself out, and drowns. So not a happy story for sure, but that's the ice story, and you'll never forget that, I'm sure. So that's what I'm kind of looking for here, is to try to take a swing trade around 24.19, 14.24, 14.19, 14.20, somewhere in that range there. And then see if we can't get down to that 13.75. See if we can't break this level longer term and get down to 13.75. So that's how I look at things. We also have a more intraday tick chart. You can notice here that use the spotlight instead. We had nice waves coming down here recently from just after the middle of October, last week in here, and maybe a little bit the week before, and then suddenly the down waves shortened up, right? And we can draw a trend channel in here. We got a little oversold in the trend channel at this point, and we have dipped underneath. This is not a very strong spring situation here. We are springing. We sprung yesterday and rally up, but we didn't get very far. We're trying to spring again today, and I sense that we're going to have difficulty in, I showed you in that range here, and you can see that that's the 14.16.5 level, that low. Should have marked this, I suppose, but that's that 14.16.50, which is back on the daily chart right here. Okay, so what we're looking at on this chart is from this point here down to here. That's here to here. And so as we've come along here, we've certainly gotten out of the downtrend channel. And as I say, we're trying to spring, so we may see a little bit. Maybe we'll upthrust this level in another couple of days, or Monday or Tuesday. That would be nice. See a little upthrust in here at resistance. That would be a picture-perfect trade setup in my book, at least. So we'll see. And this is a tick chart. I like to use tick charts for intraday trading. They tell me a good story overall, and they compress the overnight data so that I can see it clearly. I can read the overnight data better. So, you know, David, just before I left, I don't know if David's coming back or not. Since I've been out here, it looks like he might have left this.
Yeah, he's not coming.
You could make a living just trading up thrusts.
Yeah, he's not coming back.
He's not coming back.
No,
Okay.
No, but Tom's
Yeah.
here.
Okay, good. Let me just show you something here. I put this together to look at yesterday because I love springs and up thrusts as well. And I just want to show you something here. This is a chart, and this again is that 45,000 tick chart. This is a chart of the last couple, well, since September 19th, of springs and up thrusts. Okay, just on this, and this is a higher time frame. This would probably be equivalent to, oh, I don't know, maybe an hour, maybe a 2 hour, maybe a 120-minute chart, somewhere around there. But you can see here's an up thrust here where the market goes above a known resistance and fails to follow through. And we go from, I don't know, around 1460 down to, 1445. So there's a 15-point move in the S&Ps. So that's worth $750 for one contract. And, scale this up to multiple contracts. That's if you got out here. If you held on, down here, because we did see no real rally in here, it broke down through, you got more than that. Here's a spring at this level. There's one here. There's another nice one here. We travel back up to that recent high, and we get another up thrust. That takes us down for a very nice move, very nice swing move. We come down to the bottom, we get oversold in this trend channel. If we were to draw a trend channel in, we've gotten oversold. We see some demand coming in, popping up above that downtrend line. I like this look especially because it shows that demand was able to exert itself over and above the where we would expect supply to come in on the downtrend channel. As we come down, we can see that the waves are shortening. We're not getting the lengthy, large waves that we saw earlier. This is the Weiss wave applied to a larger term chart. And the downside volume is diminishing. This looks a little climactic in here with all this volume. And then we come down, and there's just nothing down here at the end. So we get a spring. It tests that spring. This is the volume on that test. Very nice. And then you get quite a nice little move up. And we come back into where we know what there's supply. See, supply and resistance to me is a big edge, I think, in trading. We can see that here we're getting some, we come back up into this area where the market has failed to go higher twice before, once here and once here. And so what do we expect? We expect the market to falter up here. We get another up thrust. Butte gets a little bit of a test on a no demand. Look at that little demand on this wave down compared to the last move up, right? Actually, I'm sorry. It's this here. So there's that no demand, what I would call a no demand test of the up thrust. And I know it sounds a little confusing, but what it suggests is that there's just no interest from the professional side of the market to go higher here. And it proves that this was the top, if you will. It proves out that this was the top, and then the market comes down. Now look at how many points you were available in this move down over the course. This was a trend day to the downside. It's beautiful. Trend days are where the market opens on one extreme and closes on the other, either up or down. We get a little bit of rally here. Look, just no real demand on that rally. Another up thrust when we come down. And this was yesterday's spring where we came up into, I think, this level up in here, just a little bit short of that, where there was a nice 7 or 8 point move. So, springs and up thrust. That's on the S&Ps. Let me show you another chart here. Same period. and this is the Aussie dollar. Oh, I've got to do it this way. Here's the Aussie dollar. Same thing. Springs and up thrusts. Now I've lost mine. Here we go. Springs and up thrusts. Here's an up thrust here. It takes us down. Now notice I have a spring here, but I put an X on there because this is not a spring I would want to take. First of all, we're in a downtrend, but we also just broke through that support, right? This little trading range where there was support. And remember I told you the ice story, right? And here's the point where they bump the Boy Scout bumps his head on the ice and falls down through. And you can see the same relationships here. Look at the down waves have gotten larger. Look at the volume coming into the downside. That's not going to rally back up through there. That's what we look for. We look for the market to approach a support level and knife right through it. So a spring in this position is not a good spot to take a trade. This is a little bit of market savvy. You need to be able to see the background conditions of the market, not just look at the hard edge of the chart and say, oh, there's a spring, let's take it. You've got to look at the overall context. The U.S. session just opened. You have to look at the overall context. Here we have an up thrust occurring where we would love to see an up thrust. That takes us down. Another up thrust here takes us down. We miss this move in terms of up thrust, don't we? Oh well, that's sometimes, that's what happens. So you want to have some other things in your trading arsenal as well. But you can see that the market, if we drew trend channels in here, gets oversold down here, and then we start moving through. So you'd want to be making a trade somewhere in here after all this demand comes in. So we get nice demand. We get a spring here. This is okay to take as a spring because we have good ease of movement up in the background, good strength in the background. Doesn't really give us much. We get an up thrust. Sometimes this happens. So we would take that up thrust. We get another spring down here. I would say we're still okay, but then we get another up thrust, and then that takes the market down. We get oversold down here. We see a spring come in. It gets tested, another spring, and that's where we are in this chart. You can see that springs and up thrusts are just a really good trade setup, that they happen very often, not every day, but quite frequently, as you can see from these roughly hourly, 2 hourly charts on the Aussie dollar and the S&Ps. They happen frequently enough. If all you really did was just pay attention to springs and up thrusts, you could do very well with that. So anyway, that's that.
Okay, Gary. Tom just wanted to come in and say a few final words before he goes off and has his afternoon nap because he's getting a bit tired. But as I said, we've had a great. That's really good information there. Really, really good. I'm looking at a trade on the Aussie dollar at the moment as we speak. So do you actually want to put a chart of the Aussie dollar up there quickly for me? And just tell me what you see on the Aussie, and then I will be able to actually go and show my charts and then get Tom to look at the S. Tom's looking at the S&P at the moment. We have had a bit of weakness in it, but he thinks it wants to go up. So we'll have to see what it does.
I think it wants to go up too. I was saying before, there's a trade right in here, but it looks like it wants to now come back down again a little bit and a little more consolidation. So, oftentimes we'll see this market somewhere just before 10 o'clock or so start to put in, give us an opportunity for a trade. Maybe we'll see a spring underneath here. We'll see. We'll watch this as we go along.
Yeah. Now, what do you think of the Aussie? Do you think it's going to go up, down, sideways? I mean, I've got my view, but I just want to see what you think.
Yeah, let me see the Aussie.
And then we'll get Tom to come in right now, look at the S&P for us live. Actually, the market's open and not a lot's happened. That's usually unusual. That's something's going to happen because when nothing happens at the open, there's usually a reason for that.
Yeah, well, the Aussie too is let's see here.
Okay, a couple of questions come in there. Abdul's asking, how do you know to look for a spring as potentially you are buying on weakness and it could go lower? No, you'd be buying on strength, Abdul, on a spring trade.
Yeah.
You'd be buying into the strength that's coming into the market. And by the way, we'll look at what a spring is in VSA terms, because really it's stopping volume. You get a decent amount of stopping volume that then gets tested and literally creates the energy for price to go up. So Gary, before I bring Tom in, what do you make of this chart at the moment?
Yeah, it's looking strong, but I think it's obviously trying to negotiate this right in here.
Yeah.
This little bit of supply. So I would watch for it to, and we see, yeah, I would be looking for a long opportunity in here, I think. But I'd like to see it correct back just a little bit more, see if it'll do that.
Yeah, I'm going to put a buy order in if I see no no supply at about 0315. Then right. I'd be, yeah. There's definitely some selling going on, Lance. There definitely is some selling at the moment at the open.
Yeah.
But it's
because
still, that's it.
Of this, so.
Exactly. Yeah. All right, Gary, stay with us because we got a lot to talk about. Tom wants to say a few final words before he goes and has his afternoon nap. We've had a great week. We've got a super group here, really great group of people. And we've been covering a lot of information, and we've got it recorded, which is great. Let me just make sure I did start the recording. Yeah, good. Okay, let's bring in Tom Williams, and Tom's going to take a look at the S&P. So here's Tom's final words of wisdom for you. And at the moment, I'm just monitoring the British pound, okay, which has not done anything really. There's nothing to trade there. But I think we might get a set up on the Aussie. Now the only problem with shorting this, I know there's distribution up here. I know we've got up thrusts. We've probably got no demand here, and it may well retrace. But my goodness, against that trend of price, I wouldn't want to be short on that chart. Not against that trend. You're trying to pick the top of the market there. I certainly wouldn't want to be short. If anything, I'd like a pullback. But could you short on that up thrust there with that weakness? That's up to you. It's your decision. I certainly wouldn't. I would be very funny, Lance. Very funny. All right. I'm not going to repeat it on air, but he's a funny guy. Right. Let's go and look at the 15-minute chart of the S&P now. Both David and Tom thought this was going to go up. I haven't got an entry on here, but it is going up and it's pushing up a little bit higher. I think that's probably what the Aussie might do. Right, Tom, your mentorship course is nearly over. Final session. We've covered an awful lot this week with this group. The emails that we've had have been very, very, very positive. People have enjoyed it and learnt a lot. Now, some words of wisdom for you. Take a look at this S&P chart, but what advice would you give all this group that have been with us this week to make money in the markets? You've been very successful. Gary's successful. David's successful. I've been successful. What piece of advice, what words of wisdom would you give the group so they can go away from this course and start making money in the markets? Here's Tom.
Well, I would say tread very, very cautiously to start with until you're pretty certain you understand the principles involved. There's only about 3 at the top and 3 at the bottom. And if you keep plugging away at it, and it's really a game of concentration to start with. I mean, when I first started, I had no idea for 2 years what on earth was going on. But I'm determined in my own way to figure it out. And the people I work with in the trading syndicate, they're not exactly teachers. They're too busy. You know, like somebody in a downtown suddenly says to you, oh, teach me this. You haven't got time. So, but I was determined to keep plugging away at it. But the only time I think, made rapid progress was when computers first came out. And I remember very, very well IBM announcing they're going to have a desktop computer out. And I thought, because I realized probably the weakest link is you. Not the market, not the data, not anything. It's you. Because you can be easily misled with the news, and the market is so devious, it's cunning. I mean, even now, I'm looking at the 15-minute chart. There was definitely some high volume came in. It went sideways. The market opened. They didn't seem to be too interested. Now it's gone up a bit. But that's all right. But you will in time guarantee, the very fact is you've attended this course for a whole week shows that you're really, really keen. And keep that up, and it will come to you. And you'll be able to look at these charts. And once you decide you're going to specialize and concentrate on just a few vehicles, so become a real expert. So you get to know the personality, almost like you know the personality of your children. You more or less know what the kids are doing or going to do because you know them so well. And but you will not regret spending the time looking at this way of analyzing the market. And I always say that we can more or less show you by the automatic signals that appear automatically without the intervention of any human beings, that what we tell you is probably the way the markets work. Because computers, if you give them things that are wrong, they don't want to know.
Okay, I'm going to do a scan of the S&P now, a stock scan, because a lot of people here asked how you select your stocks. Could you, before you depart and go to bed, explain to the group the principles of Wyckoff and how Wyckoff selected stocks and how you designed the scanner? And we'll do a live scan now. You can tell them I'm going to do the scan while you're talking.
Well, Gavin's going to do the scan as we talk. But the principle behind selecting a stock is quite logical and simple. You see, all the stocks that make up any one of these major indexes, Dow 30, the NASDAQ, even the S&P 500, the FTSE 100, they're all under trading scrutiny by the big trading houses. And what they do is that they will send out an expert out to the companies, and they will examine everything about them, the books, the personalities, everything. They will find out more than you will ever dream about, knowing about a company. And they go back and they report all of that to the trading company that's interested, sent them out. Now, if the reports are good, especially if it's very, very bullish, then naturally, every time the index starts to fall, which it will do, it'll go up and down in waves, you'll see that there are certain stocks refusing to fall, reluctant to fall with the index. And that's because the professional houses in the background are not interested in lower prices. They may even be buying that stock while the market's falling, taking advantage of people selling it. And so that's why you'll find that stocks acting as strong or stronger than the index will act faster and quicker than stocks that aren't responding to the index so well. And certainly there are no so-called bargains in the stock market. It's no good. You ask some people, they say, what stock are you going to buy? Oh, yes. I want a stock that was £200 or dollars. Now it's down to $5. That's a bargain, got to be, because I'm going to buy low and then it'll go back up to where it was. But that's wrong. Totally, totally wrong. Because the reason why it's £5 or dollars is there's a reason. The fundamentals are so bad, it cannot go up there. And that stock will probably never go up there, or may take 7 or 8 years to move. And so that's why there are no bargains. People are reluctant to go into strongly acting stocks. But believe me, if you check it out carefully, you'll see that's the best way to do it. And we've got this built-in scanner that will scan for that. Yes, I use the scanner, but because of ancient habits, I suppose, I put the selection and I look at them personally, and I make sure they are in fact actually stronger in the index, and there's no massive volume. That's if I'm interested alongside. There's no high volume on up bars in the background, because that means that there was supply in there, or it may be acting as strong or even stronger in the index. If you've got high volume on up bars somewhere in the background, that means that some market makers or whatever are selling. And therefore, if they're selling, you certainly don't want to be interested. But you'll see stocks that are acting stronger in the index, right? Then you've got to study the parent index, right? And then those are the stocks that you're interested in. And take my word for it, it works. And that means if you're just a stock buyer, that means you can go through your portfolio over the weekend, Saturday, in a matter of 10 minutes or so. And long as there's no very, very high volume and up bars, that's what the markets don't like, because that's selling. And that's only that will knock that stock back down. All the time, you don't see ultra high volume and up bars. All the time it's acting as strong as the index. You may see little tests along the way. Every time it goes down, the volume is clearly low. That's the sort of stocks you want.
Right. Can you just show everybody? I'll just tell everybody I've got the Metastock 12 version up that I'm showing now, and it's also got your volume thermometer in there. Can you explain how the volume thermometer works?
Well, I have to see it. I've never seen my volume thermometer work.
No, you haven't. I'll show you it in a minute. I've only just got it today. So.
Well, Gavin's talking about it on it, but I've naturally saw it when I was developing it. But I've never actually seen it in this Metastock.
Okay, thank you. Stay with us. Okay, everybody, just very briefly, I know a lot of you asked, this is Metastock 12. It's just been launched by Thomson Reuters. We are building the scanner into version 5 of TradeGuider, so that will come. Please be patient with us, because this was the first project that we wanted to do and see what it looked like. Underneath here, you're going to see a number of things here. At the moment, gold went into a bull move this morning, as we suspected it would. You've got green on the thermometer. You've got bullish volume down here. And these are all VSA signals. Basically, it's an expert signal. Now, I'm not going to spend a lot of time now on this, because the good news is, if you want a copy of this and the signals free for 30 days, they're yours, okay, if you want to have a look at it. So we're going to give you a 30-day trial. And Lars was the first person in the world to buy Metastock 12. Lars, well done. Hopefully, Lars, when you're over in England, by the way, give me a shout, because I'm down in the New Forest now. I've got a lovely house, but there's a pub literally 1 minute walk from where I live, and it's the oldest pub in the New Forest. It dates back to the 14th century, and it's a wonderful place. And I know that I know we've met up in Chicago, but if you come to England, let me know, and I'll take you to this this pub, Lars. It's a great place. So the scan that we just did was using the Thomson Reuters Metastock end-of-day data. Okay, so I'm using my data from Thomson Reuters. It costs $25 a month, and the scanner is built into the end-of-day version, as we can see. Yes, Joyce, you do. Yeah, speak to Ken, and you can upgrade to Metastock 12. You need to talk to your Metastock representative, Joyce. But I know that, and on our website soon, we're going to be giving a 30-day free trial of Metastock 12 with TradeGuider and the new thermometer. Okay, so that's coming. I think it'll be available next week, but for you in this room, I will send you an email afterwards with the links there if you want to try it. There is no cost. Okay, it's a free trial. Okay, so let's look at this scan. What did we find? Well, let's look at where we are first of all. This is the parent index. And you can see that we're now reapproaching the bottom of the uptrend channel. So we're coming down. Now, remember, professional money will buy on down bars. They don't sell on down bars. Occasionally they will, but they'll buy if they're bullish. So we're looking for anything that indicates that they're buying. Now, the news today has actually been quite good. There's been some good reports about US earnings. And we can see here on the left, if I put a chart up, Citigroup, that's a good one. Forget the colours in the background, you can change those. But you can see that as the parent index fell here, Citigroup refused to fall with the index. So, before Tom goes off and has his nap in a few minutes' time, Tom, when you're looking at a stock to buy, most traders and investors think that buying a low price on the stock has got to be the best thing to do. You want to buy it low. So as the price falls, their broker rings them up and said, well, I'll tell you what, so-and-so is a great bargain today. It went down 20% yesterday. But there are only certain times when you should be buying stocks like that. Now, you always look at the parent index, you look at where we are in the trend channel, and then you do your scan, and then you say, is there a clear principle for me to buy? Can you explain to people why, in an uptrending market, buying at the bottom of the channel with the right principle is common sense? Here's Tom.
Well, it is, because you've got to respect trend lines. And there are a lot of professionals that trade on trend lines only, believe it or not. You could probably, in a way, read the market better than they can, in a way. But they stick to their guns, they trade on trend lines. But a stock that for you would be a good buy, especially if you're trading it for short term, would be a stock that's definitely acting as strong as the index. In other words, whatever level the index is at, your stock should have mirrored that position within its own stock. And it should be acting as strong or preferably stronger than the index. And no high volume on up bars, which indicates selling, right? And that's the best stock. You try it and you will see. But you trade harmony with the parent index. And that's very important because stocks move up and down with the parent index, as we see. I'm looking at the S&P 15-minute chart, and a horrendous sign of weakness suddenly seems to have appeared. So you certainly wouldn't want to go long at the moment on the S&P 500 mini. We've got very, very high volume and up bar. On that, it was marked up. It's closed well off the high. We have an automatic signal, sign of weakness, has appeared. So normally you have to respect that. I always say to Gavin, you ignore the signals at your peril. So there's usually a reason why they're there. But this is certainly at the moment, the S&P seems to have hit a serious sign of weakness.
Right, do you want to just say goodbye to everyone if you can go have a sleep?
Okay, well, thank you. Well, now, I hope you've enjoyed the session all of this week. I hope you've developed some information. Gavin's going to send you recordings of all of this, so you can keep playing it over, and anything you may have missed. I know when people listen to other people talking, they say they only remember 5% of what they say. So it certainly pays to play the tapes over and listen. When I was learning things in the past, I used to play them in tapes in the car. And so I was very economical with my time, and I used to love it. And gradually, what was that, guys?
I said everyone's typing in, thanks, Tom, you've been great, good
Okay.
job. So people are just typing in, thank you.
Well, I hope I've been of some use. And remember, I do a session at 5:30 every Friday. I do the newsletter, which is published on the
BSA Club.
Yeah, BSA Club.
And tell everyone they'll get an invite for today's session with you.
Right. And Gavin just said you'll have an invite to my session at 5:30 UK time. today. So I'll say thank you very, very much, and goodbye.
Thank you, Master. Right, I'm still with you. I'm not going anywhere for a little while. Gary's still with us as well, so we're still going to be looking at these charts. But yeah, Tom, everyone says thank you very much, and yeah, great job. You've had a great week, really. Now, keep in mind, that Tom does get tired. What are you, 84 now? I mean, that's not bad, is it? He's still got all his faculties, can see these charts and can read them and teach people. And I'm very lucky to to be able to sit next to the Master. And I still learn stuff every day. We often sit there in the conservatory talking about life, talking about charts, talking about everything really, the universe. We have some quite in-depth discussions. Well, I have actually recorded a couple of them because they're quite interesting. But one thing for sure is that you must believe in these principles. Yeah, you must believe in the principles of volume spread analysis. And this whole week's course has been around learning those principles. Now, the only negative thing that Tom has at the moment is his eyesight's going. So his faculties are all there, but his eyesight's going. So the reason I wanted to put this course together is at the moment Tom can see the charts enough to be able to give you instruction. And the good thing is when I'm sitting next to Tom, and here's an email that I'm not going to show it publicly, from a lady who said to me, Gavin, I'm going, I'm partially sighted. Can I still trade the markets? Can I still, trade? And I said, well, Tom's been doing it for a number of years with partial sightedness. And you've got this Luna thing on your computer that allows you to, it's a magnifier. And lo and behold, Tom actually can see the bars with this magnifier. Okay, he can't make them out totally clearly. But the good thing for me is I'm able to sit next to him and describe the circumstances as to why the market is doing what we expect it to do and why a signal has come up, and then Tom can comment accordingly. So, what did Tom say? There was a sign of weakness on the S&P a few minutes ago, and lo and behold, the S&P's dropped a 1.5. And that's because weakness, when it appears and supply hits the market, appears on up bars like that. So, to finish the thought on the scanner, here's what Wyckoff taught us. By the way, YF says my mic's not clear. Can everyone hear me okay? Let me just make sure. Let's just adjust the mic, make sure everyone can hear me. Is the mic okay? Okay, everyone says it's good. Hey, Steve, good to see you, buddy. Great. Okay. So, all right, Tom, I'll have a little nap. I'll see. Yeah, okay, I'll wake you up at 5 because you're back on. The ringmaster will have to come and get you up. So, anyway, Tom's going off for a nap. So let's think about the logic of what Tom said there about selecting stocks. Now, when I first started trading, I used to think that the idea is to buy low. Definitely, you don't want to buy something at a higher price. You want to buy it at a lower price. It makes total sense to me. However, when we look at the market and we look at the stocks, there are certain stocks that fall and fall and fall in price. And at what point do you know that the stock has bottomed out and it's going to go back up? Well, I watched and I learnt my lesson from the British Petroleum chart in 2010. That's where I really picked this up. Because the news was so horrific about that stock. As it fell and fell and it plummeted. It plummeted. Almost every single day during the oil crisis, there was a spill in the Gulf of Mexico, the stock plummeted. And all of a sudden, I saw Yao Ming on the 9th of June. There it was, massive volume spike. But I looked at the TV that day, and they said, oh, well, BP have failed to cap the well, and Colonel Gaddafi of Libya is going to buy BP. That's what I heard. But I looked at the chart and thought, well, look, everyone is panicking about this particular stock. And guess what? I looked at the chart and Tom rang me up just before I went to do a seminar in Boston and said, buy BP. Even though the news was so horrific, Tom said, buy BP, because the volume was showing demand was overcoming supply. The public were panicking, professional money were buying. And I always remember Warren Buffett and what he said. You can't buy something that's popular and do well. And lo and behold, there came a signal, the shakeout. And lo and behold, BP stopped in its tracks and then moved sideways. But what was very, very interesting was what the bigger picture told me. And if we go here and actually have a look on the New York Stock Exchange, this was one of those stocks where the background was the clue. And the background was something that, Tom always told me, there's a lot of information in the background, but you've got to go and look for it. So I put up a weekly chart of British Petroleum. And I said to Tom, my goodness, you're absolutely right, Tom. There's a selling climax. Can you all see my chart, by the way, of BP? And then, Gary, are you still with us? Because I want to ask you a question, if you're still here. I don't know if Gary's still here. I think Gary's still here. But, Gary, I'd like to ask you a question if you're still here. So let me know. Just switch your mic on if you're around. But here we have the selling climax. Now, look at the date of that. It's 11th of June. And it is a violent shakeout. We now know, with the benefit of hindsight, of course, that stock rallied quite dramatically. It actually doubled in value in 6 months. Now, I then thought to myself, okay, is there any clue in this chart that professional money are buying at a serious support level? Well, I did. I looked at this bar here in March of 2009, and there was a shakeout in the background. But then, as I began to look at the bigger picture, something happened. Look here. I went all the way back here to 2003. And what did I see? Clear support. Not only was it support once, it's been support 2 or 3 times afterwards. So does it make total sense that on the news, the smart money were buying? And when you look at this, you realize the power of volume spread analysis, and you realize the power of the Yao Ming bar, especially when you look at a company the size of BP, and you realize that everything you heard on television had to have been a complete lie. There couldn't have been much truth to what was going on. In fact, we now know, Tom and I are pretty certain, because we met a BP engineer, they actually capped the well on the day they said they didn't. Now, work that one out for yourself. Now, someone said to me, I was in a seminar a few weeks ago, someone said, no, Gavin, no. I turned on CNN and I saw the live footage of the oil gushing out after they said they couldn't cap it. And I said, no, sir, what you watched on CNN was a recording of that well that was being regurgitated consistently on every news channel. And if you look very closely, it's a 20 to 30 second clip. And then I looked at the chart though, and I said, well, forgetting the conspiracy theory here, professional money will buy when something isn't popular, and they will buy when they know the fundamentals are good as well. Many people don't realize that BP made a profit in 2010, not a loss, a profit. And because of the spill, they were able to avoid paying a dividend to their shareholders. That's a fact. So always remember, the chart never lies. This is your friend once you read it, and you can make an awful lot of money once you realize what Warren Buffett has stated. Look for stocks that are acting stronger than the parent index using the principles of Richard Wyckoff. And when you see them, always look for opportunities to buy when the market is shaken out. William's asking me, is that BP bar here a Yao Ming bar? Actually, William, that's Yao Ming standing on Yao Ming's shoulders with another Yao Ming on top. It's enormous. It's the highest volume seen, okay, for you can see for 10 years. That is a telegram. And if you can read the chart, that is the smart money sending you, because you can now read this stuff, a telegram. They're saying to you, hello, we're buying. And we note, though, that the change in behavior in the market didn't happen for several weeks after that bar appeared on the weekly chart, which is where I bought it. And when you look at these charts, as Tom said, they're a language. And now we're back at the bottom of the trend channel, and any no supply bar around $40 or $38, I should be buying some more. So remember, professional money will buy. Now, Tom said that S&P looked weak because of this signal. And he said to ignore the signals at your peril. And indeed there, the market has fallen. Now, let's have a look at what happened to the Aussie dollar. It didn't behave the same way. So yes, there's weakness up here on the 5-minute chart. But in fact, and Lance, I know you were looking to potentially short this. It's still in a pretty good trend up. I would want to see a change in behavior and then maybe some no demand or something to short that. But at the moment, that could easily go up a lot higher, very easily, because it's broken away from the round number. And if we look at the 15-minute chart, we start to see what's going on. There is some supply up here, but we've got to look at the bigger picture. Is there a place that we can get up to that's going to act as resistance? Sure. So really what we should be looking for is any principle of no supply along that top line here. Now, I can't take the trade yet. It's not ready yet. But if this holds its a bar in the next 10 minutes and we see some sort of test of this top, then this market will go up. I have absolutely no doubt about it. William's asking, are all ultra-high volume bars climactic action? It's very difficult to answer that question because ultra-high is climactic. Yes, it is. But I mean ultra-high, as in like massive. But I always, the way I learnt this, William, was I decided in my own mind to just say to myself, you know, what's going on? That's what I always ask myself, what is going on? And every time you see a bar, a price bar, especially on ultra-high volume, you should say to yourself, what's going on? What are the smart money doing? What are they playing at here? What's their game? Not every single ultra-high volume up bar is a sign of weakness, but a lot of them are. I mean, you could have shorted that 15-minute S&P chart and taken a bit of profit on the downside because it closed in the middle. And Tom actually, if he wasn't so tired, would probably have said, well, you know, he looked at me and he said, should I short that? And he was too tired to focus on the trade, so we didn't take the trade. But, you know, I shorted the Japanese yen this morning. And let me just show you that's the only trade that I've actually taken, and the pound trade, obviously. But if we look at the Japanese yen, okay, and let's just remind us what we did there. Because someone said, could I go over what I did? And I will do. Be happy to. Yeah, and that's the reason I came out. Yeah, exactly. No, I agree with you. I saw this as well. Oh, yeah, I'm ready. Yeah, I shorted in here, down here, didn't I? And I used a 5-minute time frame with an up thrust. But I knew we were going to find support down here because this resistance level here is in an uptrend. And sure enough, we got signal, didn't we? There was no supply down there. So I actually took my trade off exactly. If you look at the low of the bar, it was about 225. So I was about 10 ticks before I actually decided. I took my trade off down here. It went down a little bit further. But then, look, we get support coming in. But now what's going on? Something's going on. Now, is this absorption volume? Don't think so. Not at the moment. Because the next bar is not testing this. They've marked it up further. And then it's collapsed on the low. So could I get another short trade on this? Sure. Yeah, this looks very, very interesting. Because even though it's against the trend, that volume is very high. And you almost know that if they've done this, they're going to want to test that previous level there at 542. So do expect probably that market to drop down to this level. Gary, are you still with us, by the way? Let me just, I don't know if I can. Yeah, you are. Yeah, but if you're still there. Gary, you still there? Yeah, I think you may be on the phone. Okay. Okay, Michael's asking, what do the colours in the volume pane signify? Okay, great question. When we have it at the bottom here, and this is a 15-minute chart, when the volume gets into this salmon-coloured area, it means that it's unusually high compared to the last 15 bars behind it. All right, so we're always comparing it to to the last 15 bars. And what we look for, and again, I don't reveal that in a public seminar, that's for you guys here, but basically what we're looking for there is we're looking for whether the market is actually showing us weakness or strength based on the volume. So here, at the moment, for instance, that is a serious sign of weakness. That is not a sign of strength. Okay, now this will very, very likely turn out to be a hidden up thrust, I suspect. And we've hit a resistance line. So what we look for now, though, is what we mustn't see is some sort of no supply bar up here, because if we do, it's going to keep going. What we want to see is a change in behavior now in the market, and we have to wait for that. You know, and by the way, I am overrunning a little again today, so I hope you don't mind that we've overrun a bit previously. Several of you have emailed me to say you're more than happy that we overrun because you get more value. That's fine, and I do want to make sure, though, that I know your time is valuable, but we are going to overrun a little bit here by about probably 30 minutes. I'll try and get you all out of here at around 9:30 Chicago time. So what we see on this chart is a sign of weakness that looks like it's going to be confirmed on the next bar, and then we're looking for no demand. And then we're looking for a change in behavior in the market, a change in trend to the downside, and that's the key thing that we look for. Now, a couple of you asked about the thermometer and the way it's visualized here. What you'll notice here is we've got bullish and bearish volume and bullish and bearish volume here. And this is very similar to what we've got in the Trade Guider software, except we've actually built it into Metastock 12 to now look at where the market changes behavior. So this, I like to call it the behavior bar. And what do I mean by that? Well, I mean that when the market starts to change behavior, you can see where it's doing it in any time frame, by the way. This works. I tried it the other day. I mean, I only got this yesterday, so I tried it yesterday on a 1 minute chart. It works great. You can actually see where the market is becoming bullish and bearish. And I don't like using 1 minute time frames, but I have to say, using this, it did pick the turning points in the market. And Tom actually did say to me, you could trade off this just on its own. And I think he might be right. But the way I use it, and I've only been studying this particular version, Metastock 12. I've got it in 11. I haven't got it in 12 until yesterday. And what I've been looking for, and this is actually a chart of gold, is where do you see indications of strength followed by a change in behavior and bullish volume? And several hours ago, now it's about 8 hours ago, we changed behavior in gold on the 15-minute chart. And if you go to different time frames in this, you'll notice that we change behavior in other time frames too. Here, on the 15-minute chart, we changed behavior. Here, we changed behavior, although we're still in a daily downtrend, which is quite interesting. Yeah, absolutely, yeah. Can I zoom in on one of the charts? Yeah, what you do to zoom in, let's have a look at this chart here, is you go down here, and I'm just learning this myself. Here we go. All right, so that's where we're currently at. We've just actually had an indicator. Now, if you put your bar, I think you've got to have an expert advisor on here, but if you click on that indicator, it does actually bring up a signal, as you can see, and it'll tell you whether you're in a bullish or bearish area of the chart. And you can see here, this is a 15-minute chart that actually at that point the market was bullish, and it still looks like it's going to push up as well on the gold chart. So what we notice there is that the market is acting in a bullish manner. Okay, and the reason that for this morning's big move up in gold, and on the and in fact on the 5-minute time frames as well, I'll just go and show you. We actually picked up something quite interesting. What signal have we just had? Okay, is a test in a rising market. Now, if this is testing that, which it is, this could easily push up and and you probably will get a secondary up thrust. So gold, as we can see at the moment, has had a very significant move, just as David Weiss suggested it would, because of that. Now, a couple of questions come in. Let me see if I can answer them. Great, thanks, Daniel. Says thanks for your time and expertise and a great course. Good. Okay, done that. Samir's asking me how I correlate between raw volume and the volume thermometer. Well, what the volume is looking at, I don't understand what you mean, Samir, by raw volume. Volume comes from two places. It's either tick volume or it's exchange traded volume. Okay, and the volume we're getting is exchange traded volume. And the thermometer then actually looks at the closing price now of each bar relative to the volume. So if you remember, we explained to you on Monday Tom's simple trending system. If a market's bullish, it will go up on increasing volume and retrace on decreasing volume, just like you've seen here. You just saw that. So if this is going to be bullish, it will go up. Now, markets don't like very, very ultra high volume bars like that. But if the market refuses to change behavior, means it's refusing to fall, then guess what? The market's going to go up. So you want to look for long trades. And here you can see the trending system that Tom uses is quite simple. It's got down bars here are red, but they're on low volume. Up bar, up bar, up bar, down bar, not too high volume. Up bar, down bar, not too high volume. Up bar, level bar, low volume. Down bar, not too high volume, and then two nice, healthy volume bars. And as you can see, gold's climbing for that reason. So that's what the thermometer is looking at. It's measuring and giving you a very simple visual view of whether the market's in a bullish or bearish behavior. Daniel, I am going to send you all the trading plan document that I had yesterday. You will be getting an email from us in the next 24 to 48 hours. It'll be over the weekend. It'll be from Richard Bednall, who's my business partner, and in it will contain the PowerPoint presentation that we did with all the charts. You will also get a copy of the recordings. There'll be 5 of them, and they've just got to be uploaded to the server, which is what takes the time. You'll get a copy of Tom's newsletter, and all of you today, whether you're in the VSA Club or not, are invited to attend Tom's seminar, where he does the market wrap-up for the week, and he does his newsletter. So I'll invite you all to that with my compliments, and I'll put a link up in there shortly. Okay. Can we look? Okay, let's do that then. Let's go and have a look at the overall state of the... yeah, I'm going to put up a link. In fact, let me do that now before I forget. Let's put up a link in the room. So bear with me. You're going to lose the screen here just for a second. And I will go and get you all a link to register for Tom's regular VSA Club event that he does every Friday, where he sets the scene for his mentorship, for his newsletter, which happens on that day. Let me just get that for you. Okay, you should now see, can you just all confirm that you've got a link? I've just put it in the chat area. That's to register for Tom's seminar today, which takes place at 11:30 Chicago time in 2 hours. And it's an added little bonus to thank you all. And you should see that there. And come and see Tom where he does his market wrap. So why did the market go up? Because we've got a test in a rising market. And they're tested the supply. This is bullish behavior. This is not bearish behavior. Now, let's go and have a look at the indexes then to wrap up. We've got about another 10, 15 minutes. Gary, do let me know if you're around, by the way, if you're here, because I see you still in the room. Okay, and we'll go and have a look at... I'm going to look at it here, in fact. All right, let's go and have a look at the S&P. I've just downloaded my data from yesterday, so we'll use the end of day charts here. All right. Okay, now I'm not going to analyze every single market because that would be pointless. The S&P is the main market leader. He went to get pancakes, says John. So that's probably exactly what he did. Here we see the overall look. Okay, let me just make sure you can see the charts. That would help, wouldn't it? There we go. Okay, so can you all see the daily chart of the S&P 500? This is the cash. This is not the futures market. Can everyone see that? This is the cash. Okay, good. All right, good. So let's just observe a few points about this market. Let's put up 500 bars so we get a bigger picture. Now, we all agree, I'm assuming, we're all in an agreement that the overall trend on this chart is up. There's no doubt about that. Does everyone agree with that? That the trend from here to here is definitely up. Yeah? You all agree with that? Yeah. So the long-term trend is most definitely up. But we have had a pullback, and quite a significant pullback from here back down to here, down to 1400. Now we're at a lovely round number. 1400 is a nice number for the S&P to get down to, and it just happens that we've got a US election in the next week or two that's going to time itself perfectly. We've also had some very positive economic data today, so we've got to look out for shakeouts here. If professional money want to buy more of any instrument, they're going to shake the market out on news. We haven't really seen any shakeouts as such, but we've definitely had a pullback. William, yeah, says, do stocks on my trading list move enough during the day to be... Yes, they did. Absolutely, William, they do. Yeah, and thank you. I'm glad you enjoyed the class. Thanks for your comment. No, William, they do. Yeah, no, you can trade stocks intraday, especially when the market's volatile and there's movement. I mean, Google the other day, I think a few weeks ago, moved like 20% in one day. So, yes, you can trade all these principles that we're teaching you intraday. Absolutely. No problem at all. Now, when I look at a chart, I look at the immediate trend of price in the background, but then I've got to look at the right edge of the chart. Now, I've asked you all if we're in an uptrend or a downtrend, and you all said we're in an uptrend. Now, if I put up 60 bars from here, are we in an uptrend or a downtrend? What do you say now? From this point here, are we in an uptrend or a downtrend? Ha-ha. Now you're going, hold on a second, we were in an uptrend, but now we're in a downtrend. What we're doing is we're approaching the support line. Now look at the bottom of my trend channel. Remember that trend channel I've drawn, and you've seen it, it's been in place for weeks. We're coming back down, and look where the trend channel intersects, right at the round number. There's no accidents, there's no coincidences in the stock markets. They all work on numbers. Right now, we're falling to the bottom of a long-term trend channel, and we're doing so on not unhealthy volume. But we need to see a shakeout, and I'm almost certain next week we're going to have a markdown potentially through 1400. That'll get rid of all the traders that potentially are holding positions down there, and there'll be thousands of them. And then we'll start to look for the rally. There's no reason to think that this market is completely weak, but that was the reason here that the market began to fall on the daily chart. And the reason is that we've got a lot of volume on that. It closes on the low of the bar, or near the low. Next bar is lower, and then they upthrust it a few days later. So the daily chart will give you a big clue as to where the market's going. Yes, Jitendra. In fact, Jitendra said, could we have a webinar where you show us how to use the Trade Guide software and also the plugins? And in Jitendra, actually, AJ, who's head of support, is going to be doing a webinar, I think, hopefully next week with Ken, where they'll go through all the parts of the software, all the different tools within it, so you can become familiar with it. And yes, we will do that and record it. So it's a great idea, Jitendra, and we would be very happy to do that. And in fact, it was on my list, so you read my mind a bit. Now, if we look at the weekly chart, and we go to 200 bars, we can see where the buying took place in August of last year. Now, that has not disappeared from this chart. This has not disappeared. There is buying on that shakeout bar, right? And it's a lot of buying. Now, the smart money used the news and used the opportunity on the news to buy the market and sell their gold. That's what happened. So at the moment, we are seeing a retracement. What I would love to see at this 1400 level is the shakeout on a weekly chart. A bit like what you're seeing there on very high volume, because I'll be piling into the market and buying it. At the moment, the market looks strong on the weekly chart, but it's in a retracement, which it always does. Look, we retraced last year at this time. October and November are known for that. But we've also got a major news event coming up, the US election. And despite all the news about the economies around the world being negative, in fact, the professional side of the market must have known last August that companies were going to be doing well. And some of the sectors that you should be looking out for right now are banks. You want to be looking at the banking sector, because despite all the news, the banking sector got stronger, not weaker. It got stronger. And energy sector is starting to look strong as well. Not surprisingly, really. In the UK, they've just put the prices up about 8% for fuel, for gas. So, of course, that's going to make more profits for those companies. They'll be able to pay big dividends, and the stocks have been undergoing accumulation. So no particular surprise there. So my overall view of the market, I think gold will have a little mini rally. I think the S&P will have a little correction, which we're seeing already. But then, with the election coming up in a couple of weeks' time, there should be some sort of shakeout that we'll see it. And we'll all see it. And we'll see it because we can read volume. So let's try and summarize all the things that we've learned over the last week. Well, you can't really summarize it. There's a lot of information in this course. And I know by your emails that you've been sending back to me, you've all taken something away of value, and that's the key part of this. I'd leave you with a few words, a few sort of words of wisdom, if you like, that I've learned. One of the most important things in life is belief in yourself. It doesn't matter what whatever you're doing, if you don't believe in yourself, you're not going to progress. You've got to believe that you can make money in these markets. You've got to believe, and I mean believe, that the markets are manipulated, but you can take part in the market legally and ethically by using volume spread analysis. You've got to believe not only in your ability now, but you've got to go and put this into practice. Because belief is one thing, but you've got to then go and use, or what I call, take massive action with the information that you've been given. You now have information that very, very few traders and investors around the world have. I'm amazed, I'm constantly amazed that so many traders and investors don't even use volume at all in their studies. And I don't know why. I still haven't found the answer to that. I think maybe the reason for that is volume analysis on its own is not initially easy. And it's much easier for people to use a stochastic or a MACD, but then they're going to lose money, and they do lose money. But once you understand and get your head around the concept of volume, and you read it bar by bar as the market's unfolding in the different time frames, I promise you, you will get it. Because as I so often say to people, I'm nothing special. I'm just a former policeman who managed to start a business and had a bit of luck meeting Tom Williams. But I don't think, and Warren Buffett agrees with me, that intelligence actually makes you a good trader. You know, Warren Buffett actually said in a recent interview that you need an IQ of 25 or above to be successful in the market. I think I'm 25 and a half. So, a bit more hopefully. But he's right. Sometimes being too intelligent about the market and asking too many questions confuses the issue. All we're interested in, we're not interested in the whys, the wherefores and the who. We were interested in, is there a signal based on VSA that I can make money on? And once I got my head around that principle, that's what I'm looking for. Simple as that. I'd say to myself, is there an opportunity today for me to make money in the markets? And all this week, I've been doing very well in the markets. I've made money. And, you know, it's not that I'm trying to become a millionaire in the next week. Little and often, you know, $100 here, $500 here, $300 there, $150 on the Japanese yen today. These things all add up. And you start to become surprised in 6 or 8 weeks of trading. You go, wow. But remember, you've got to wait for your bus to arrive. And the principles of VSA are there. They're on the charts all the time. Practice, please, practice. And I know some of you said, well, I'm not particularly interested in doing a demo or having a demo account because, you know, I want to trade with real money. That's fine. But just trade a small account then. Don't go straight to the market with all your hard-earned money. You've got to, I suppose, what's the right description? It's a rite of passage to become a professional trader and make money in the market. It's a right because once you've learned this language and you've understood this language, as Tom keeps saying, if you listen to all his seminars, you'll have it with you for the rest of your life, and you really will. And you'll be able to talk to people who know nothing about the market, or some who consider themselves experts, and they will probably be telling you to buy an instrument, and you'll look at it, you'll see the end of a rising market, you say, no, I'm going to sell. And they'll think you're mad until a few months later you're proven to be right because the price fell. And on the YouTube videos that I produced, many times I see a principle, I'm confident enough to go public with that information, have thousands of people view it, and then email me back and say, well, that doesn't make sense, Gavin. How on earth could gold fall? Everyone told us it was a safe haven. But of course, as we now know, life isn't quite like that. If you're told something's a safe haven and you see ultra high volume on an up bar, it's not a safe haven. They're encouraging you to buy from them at the wrong time. And that's the key. Well done, Lance. Good for you. Good. And again, we've got Lance. Thanks for all your contributions. He's just made some money. He's just typed in. That's great. Good. Good. Well, be careful when you make money in the markets. You've got to be able to deal with the losers as well. Now, we've had a lot of presenters in. We had David in. We've had Dr. Gary Dayton. And I want to thank them for their contribution to this mentorship course. But really, it's all about Tom Williams. Now, just keep in mind, this week I've been with Tom and I've done quite a lot of the talking because Tom does get extremely tired. But his passion is, like my passion, is to help the uninformed traders and investors in the world to learn the truth about the markets. And I hope that this week you've not only known that you're hearing the truth, but you're going to go and apply what we've taught you so you can all be profitable. But let me leave you with one last thought. Everything resides within you. You have the power. You've been given the power, okay, to do what you want with your life. And if you want to make money in the markets, you've made one great decision already. You've come into this course and heard from a man of many, many years' experience, Tom Williams, how he looks at charts. And when you go back and you get the recordings of this course, don't just leave them on your computer and say, I'll look at them tomorrow. Take action. Determine for some time each day you're going to go and review some of the course. Because I know that I've picked this up through repetition, through going through the same principles over and over again. And I have the confidence in my ability as a trader now because of the repetition that Tom kept showing me. And when I go on stage, as I do regularly now, to do live trading events, in fact, I'm going to the Vegas Traders Expo next month, and I do live trading and show actual trades with real money. The confidence that I've got is because Tom instilled it in me. And everything in this course that you have learned will give you the confidence too. But I'll say one more thing. Believe in your ability. You have it. You've already committed to being in this course. You've been very attentive. You've been a great audience. And as I say, we filled the course, so that we actually completely filled it. And I'm not surprised, really. So on behalf of Trade Guider and Tom and myself and Dr. Gary and David, we hope you've enjoyed the course. Please do give us your feedback. We try and do a good job. We never really know if we've got through to you because I can't see you. I can only imagine that you're getting information from us that is of use to you. But from the emails that I've had and from the people typing in out there, it seems that we've done a reasonable job, and I hope you've enjoyed it. Thank you very, very much. Best wishes and blessings to all of you, and I'll see you later on. I'm doing 2 events today. Detective Holmes follows the smart money with Infinity Futures, and also I'm doing an event with Tom at 5:30 my time here, which you've all got a link to. So I hope you've enjoyed it. Thanks, everyone, and Tom and I wish you the best wishes and good trading and constant profits. Take care. Bye-bye.